All right. Hello, everybody. Welcome back to the channel. This is going to be the Fed FOMC meeting into the market close. The theme of the market open was volatility based on what Kevin Warsh was going to say, even though we knew that the Fed was likely not going to raise rates. The Fed was likely not going to cut rates either. And so, you had some green in the morning. The argument was things are going to be okay. You had a little bit of red. What did we get on the Fed FOMC decision? Well, we got it just 14 minutes ago. They're leaving rates unchanged unanimously. I messed up that word so bad. Unanimous. Unanimous. How do you say the word? Unanimously 12-0. The problem is, and this is why it is hard to think you have a plan on FOMC days, because you might just not have a plan. 9 of the 18 FOMC participants want a 2026 rate hike. And that is why we are going red right now. S&P, dude, taking out all levels from yesterday. I did not expect this to break below 748. Immediately, as soon as that was announced, we got all the way down to 745. We're getting a little bit of a bounce up to 747. Hopefully we reclaim 750. But that's your headline, and that's why the street's kind of mad. That's why the street is kind of mad right here. 9 out of 18 of these participants are saying we deserve a hike. One of the participants thinks we need to have 3 hikes. This is the dot plot right here in terms of how the Fed is thinking of everything. Obviously, you can see right there, a significant amount of the Fed members believe hikes in 2026 should happen. They are assuming we will get to 3.1% by the end of 2027. That would only be 80 basis points down from where we are right now, which is nothing when you think about it a year from now. If it was by the end of the year, that'd be a different question. By the end of 2027, and you're talking about barely getting any rate cuts into the system. So this is just one of the more surprising rate dot plots that we've seen in a while. And part of the reason for that, I think, is also because of obviously oil was elevated over the past couple months. Now, recently oil came down. Maybe if these Fed members voted a couple of days after they initially voted and they saw oil come down, they would have a different perspective. Maybe Warsh is going to be talking about that today. But it is quite incredible to see how this argument is playing out and where the dot plot is lining up for how the Fed is thinking about this. And obviously that's what's hurting the markets right now. Now, not everything is red. But these were kind of your summary of events. You got a lot of things that are starting to flip red. Again, the Fed left rates unchanged. 9 out of 18 officials expect at least 1 hike. Fed lowers its median US GDP growth projections to 2.2, which is also not good because, obviously you don't want to have less growth into the system, and potentially it would be an argument for rate cuts. But as of now, it looks like inflation is their biggest concern. They don't see PCE inflation, which is the preferred measure of how they think about inflation, till 2028, getting back to 2%. So yes, the dot plot did happen before oil prices came down, which means maybe Kevin Warsh will speak a little differently on that now that oil prices are down. But still, it's an aggressive print nonetheless, and I think that's why markets are reacting to it as badly as they are. Having said that, I mean, it's the S&P that's reacting. Individual stocks, Nebius continues to make a move. 289 looks like this thing wants 290. 289.91, touched 291 at one point. Let's see if we can get back above there. Robin has just been a crazy day. I left at 103. It touched 109, 108.50. Webull, great day. That's up 8%. Interactive Brokers, that's up 3%. IREN's up 1%. I mean, you have a very, very high beta day. Look at what's down. Amazon, 2%. Meta, 4%. The Qs are red. Tesla's down. Nvidia's down. Google's down. It's almost like people are just selling their Mag 7s, Google down 2%, and buying brokerages and neoclouds. Corey right there up 2%, which, I mean, those are the names that are moving here. SpaceX also could not get back above 200. It's at 198 right here. Got all the way down to 187 when that Fed decision was announced. And that one is trying to come back up for life right here. So I don't really think we're going to hike. I find it hard to imagine we're going to hike. And I think Kevin Warsh might calm everybody down by saying, look, this is how we're thinking about the dot plot and how we're thinking about the future. By the way, their statement was like 4 sentences. So it wasn't like some really long statement where they have all these different paragraphs of news. It was like 4 sentences of just like, hey, this is what we're thinking. Only one person has a cut this year, and one participant, presumably Warsh, didn't submit a summary of economic projections. So all of them submitted. Warsh did not, or at least that's the assumption. And the statement gets a complete write-through from top to bottom, which is much shorter than what we historically have had. 9 out of 18 officials have at least one hike this year, and 6 of those 9 have multiple hikes. 6 of those 9 have multiple hikes. So, yeah, once again, I really don't think we're going to get a hike, but that's why the initial reaction was red. But again, that initial reaction was red. It's not really affecting a lot of the high flyers in the morning. SoFi still holding on to the 18s. It hit 1870 at one point. Even Bitcoin not getting hit that bad, still at 65. It was at 64 in the morning. Keel, great day. That's up 5%. Iren is up. Robinhood's up. Nebius is up. Microsoft just keeps going down because I guess hikes are bearish for the companies that, quite frankly, have enough capital to support themselves. But all the Max 7s getting hit. A lot of the SaaS names getting hit. Service now back below 100. But your high beta names that you would think would go down on the idea that we would have a hike, they're not really going down, which to me is saying that the market doesn't believe we're going to get a hike. Otherwise, Nebius, Hood, CoreWeave, I think you would see those go red. And we're just not seeing those go red. So this is the dot plot for those that are asking. Again, it is hawkish, which is why the initial reaction was bad. I'm more intrigued to see how Kevin Warsh is going to handle the media, how he's going to talk about politics, certain questions probably going to get brought up around the Iran war. I mean, Jay Powell tended to try to not take political questions, but I mean, sometimes he ended up getting political. So it's going to be really interesting to see how he interacts with that more than anything else. Trump did have a press conference as well earlier in the day. Didn't say anything too different from, I think, what we've already heard him talk about, but his main argument was that there are lots of investments, and that's why trying to officially get this deal done with Iran.
You can invest in any country you want, but you can't invest there. Well, they need investment because we did $1.5 trillion, maybe $2 trillion worth of damage. So somebody's going to have to help them out. There's no guarantee about helping them out, and could be their neighbors will help them out a little bit. I don't know, but it's a lot of money. Almost nobody has that kind of money. That's the kind of damage that was done.
So nothing too crazy from Trump, but obviously Trump's probably not going to be happy if the idea of a hike meaningfully goes through. You guys saying Steve is upset? Well, Steve's always been upset at the Fed. Steve has wanted to abolish the Fed for a very long time. I would imagine Steve's not the happiest if 9 out of 18 of the Fed members, we'll have a lot to talk about on basis points tomorrow, want to get a hike. I can't do anything to save Steve. Steve's going to have to realize that the people running the Fed, someone had a take today that I thought was kind of interesting. The take was that because oil is down and because, the Fed members knew that oil was eventually going to come down, the Fed members themselves voted to get all these hikes because they did not want Kevin Warsh to have a first successful meeting. Now, a little bit of a conspiracy. It kind of implies that the Fed members aren't fans of Kevin Warsh, which I don't know. Maybe they're not. But at this point, I don't know. I don't know how this meeting is going to turn out. S&P, I really was surprised we lost 745. I know we're slightly recovering over here, but that was a level I did not think would get lost off of something that was expected. We knew that they weren't going to raise rates. We knew that they weren't going to cut. But I guess the vocabulary of how hawkish they feel for 2026. Just does anyone realistically think they're going to hike? Like, I think Trump would legitimately lose his mind if they actually hiked, and I don't think Kevin Warsh will allow it. I don't think he will, even though, 9 out of the 18 members want to. Meta just getting destroyed today, 576. Dude, people are really selling the most important companies in the world. And I was talking to Jason earlier today. Jason had a really good quote. He said, essentially, these people are using the Max 7 as piggy banks to go buy everything else. And I kind of agree. At least today with this price action, it's almost like you use the Max 7 as your piggy bank to get out of it, and then you go buy something that's way more high beta, like a Nebius or Hood, which are just leading the day. And, that's making a lot more money. Someone at the Fed said 3 hikes. Yeah, I saw that. 3 hikes in 2026 would be a little... There's just no way in hell that's happening, right? Like, I feel like that's someone who's trying to write a book or something, trying to get some attention. Like, 3 hikes in 2026, really? Really? Are we actually going for that? We got the Fed meeting in about 7 minutes, and we'll see what Kevin Warsh says. What color tie do we think he's going to wear? I think, I don't think purple would be crazy. It would be a nod to Powell, but maybe he wants to get out of Powell's shadow, and maybe we don't see purple.
What does the Fed do by the end of the year?
And I thought it was interesting, Francis, that David said he thinks that the May report, that was last month's for CPI, that will be the high water mark. Because will the conversation change if we start to at least improve a little bit on that front?
Well, the math of it is that we probably saw the worst of the year over year. But a reminder, Americans are up 25% in terms of the cost of living. And what worries me is not what was the high water mark, it's where do we get stuck? Core inflation is going to be stuck in the high 2s or low 3s, regardless of what happens to energy ahead. And that's the big problem for the Fed. And when I look at the statement today from Kevin Warsh, my favorite quote from him, he wants the Fed to be back on page B12 of the newspaper. He told us this. And so he shortened the statement, but my goodness, challenge accepted. I could come up with a front page story here. And
What
the
would
one
it be? Write your headline.
I'll do it right now. I'm joining the news network. The most important line here is the last line of the statement. The committee will deliver price stability, not price stability and full employment, price stability.
This is the statement right here. She's right. It's 4 sentences. The committee decided to maintain the target range for the federal funds rate. Economic activity is expanding at a solid pace despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment are strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. The committee will deliver price stability. I mean, they're not talking about the labor market there. They're not even meaningfully talking about inflation. You see all the stuff that it was cut out from the previous one. They're just trying to make the argument about price stability. And, that 2% goal they set years ago, obviously, if they had just made it 3%, I feel like so many things would have changed. But they picked 2%, and we are nowhere near 2%. You can't change 2% because then the Fed lacks legitimacy. But I think Kevin Warsh is not trying to get on the front page of the newspaper. As she said, he's trying to get something where you have a much more reasonable interpretation of where the market can expect rates to go versus the speculative nature of how the market has interpreted in the past rates to eventually manifest themselves. SPY, once again, loses 746. Was this dovish? This was not intrinsically dovish. In fact, this was the opposite, but the meeting might be dovish. Kevin Warsh himself might be presented as a dove, even though the rest of the Fed is not. And then the market's going to have to deal with, okay, who do we trust here? How do we think this is going to play out? But if half of the Fed committee wants a hike. Now, granted, this was before oil fell a couple of days ago. So I think maybe if Kevin Warsh even makes a statement that, as per recent developments with the price of oil coming down, yada, yada, maybe there's something he can say to kind of massage the market in terms of feeling so hawkish. But we're going to have to see. Short-term interest rate futures now pricing a bigger chance of a Fed hike than a hold by September. Let's pull up the September hikes and cuts. September. Yeah. Wow. September is pricing in a much higher likelihood of a hike right here than a cut. 41% you're pricing in for a hike. And 8% for 2 hikes. So two 25 bips moves, 50 bips. It would be good for my high yield savings account. Yeah, I mean, look, if you've got millions of dollars and you just stick it into a high yield savings account or a money market fund, you raise rates, cool. I'll get an extra $100,000 per year or something. But it's not good for SpaceX. It's obviously not good for the high beta names. I mean, technically, the large cap semis don't really need to worry about the cost of capital, but because they're taking on so much debt, one could argue that it's connected to them to an extent. I just don't think we're actually getting hikes. Don't think we are actually getting hikes. Warsh will be live in 3 minutes. VIX just spiked up. That is up 10% on the day. Again, if you were in a long trade going into the FOMC, just on the assumption that it would be dovish, you just got hit to the opposite angle, even though it wasn't supposed to be as hawkish as this. 745.90. That's a full $8 reversal from the highs of the day and $5 reversal from basically 15 minutes ago. So what do we get? Well, we don't get a hike. We don't get a cut for now. We eventually get hopefully a cut at the end of the year. If not, the best case scenario as per the Fed and the dot plot is 2 cuts by the end of 2027, which I don't know if that's going to cut it in terms of keeping liquidity up, getting the housing market to open up, all that stuff. But that is the Fed's best case scenario. Obviously, I think that's not going to be how it plays out, but as of now, that's what we got. War should be live in about 2 minutes.
Brookings senior fellow David Wessel is back with us. Welcome to both of you. Larry, I'll start with you. What's your, if I didn't show you the market reaction, what would your reaction be?
I would say that this is why Kevin Warsh didn't want to put his dot in, right? Look how quickly you've seen these changes. We came into this looking for probably a hike this year. Now we're talking about 2 hikes this year, right? So,
but we came into the year looking for a cut.
That's what I'm saying.
People were hoping for a cut. Home buyers were hoping for a rate cut. They're hoping for an under 6% mortgage. And what happened today, and not today, but with the inflation story is that, guess what, folks? Mortgage rates aren't going down. If anything, they're probably going to go up.
Well, with your last speaker, David Kelly, I agree with him. You follow the energy markets. Think about this. Back in April, energy prices were up almost 90% year over year. As we sit here today, they're up 3.5% over where they were last year. So I think that inflation is going to start to come down, and that will be the catalyst, and that'll cause a lot of these minds to change on the Fed. Because I do think,
which we all know that's how it's going to play out. Their minds are going to change once inflation comes down and oil comes down. So honestly, the fact that the market's reacting this aggressively towards this is weird, but you know, it does feel like this should be resolved as long as oil continues to come down. Okay, War should be live in about 20 seconds. This is the first time we will be seeing him officially as Fed chair, even though none of our family and friends probably even know who Kevin Warsh is. Literally, I would recommend texting one of your close friends or family members. Be like, hey, do you know who Kevin Warsh is? I would guarantee they don't know. All of us know who he is because all of us are going to try to make sure we continue to understand how to navigate these markets. Here we go. He's live.
It's an honor, a true honor to be back at the Federal Reserve and to take up this duty at a time of such consequence. I've been especially heartened by the warm welcome of old friends and new colleagues both. And I've listened closely to my fellow FOMC members, heard a lot of new ideas, new thinking, and genuine interest in moving the Fed forward. This week's FOMC meeting exemplified the very best of the Fed's traditions: rigorous debate, open-mindedness, commitment to mission, responsibility, and accountability for performance. In this business, they all add up to one thing: getting monetary policy right, or as near to it as we can do. That is our North Star. My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded. As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate at 3.5 to 3.75% in support of the Fed's dual mandate. The committee also reaffirmed its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment, both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability. At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something, a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, have refrained from offering any projections of my own, consistent with my long-held views on the SEP, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the task force on productivity and jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks, that'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
Q&A, here we go.
Hi, Chairman Howard Schneider with Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall end. Hopefully most, if not all of them, concluding by year end.
And just specifically on the inflation framework, you talk about first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter. Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is, what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
Colby. Thank you so much. Colby Smith with the New York Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation running above target, and under what circumstances you would support the Fed taking some action and raising rates.
Sure. So quite a bit there. Let me try to break that into pieces. First, we have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years, inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like an encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the task force on communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current policy settings, then I am curious how restrictive you think things are at the current moment, given the flow of data that we've seen and, you know, forecasts that are coming down the pipeline.
Yeah, I've heard characterizations both inside and the Fed about that. I'll give you my own. It's uneven. If I look at the housing markets as one example, Fed policy isn't the single determinant of the state of the housing market, but broadly I would say there, Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's uneven. That's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. But the good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
You've said you don't like forward guidance. You dropped it from the statement this time, but with the dot plot, 9 members suggested that they want a rate increase by the end of the year, and the markets have taken that as forward guidance. So what does this mean in terms of how you guide the markets and in terms of what the dot plot's future is?
I'm going to have to give you the same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit more. I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, you know, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. And they didn't feel bound by them 6 weeks from now or 6 days from now, and if in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, weren't, this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly, press conferences, dots, meetings and the like, transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly, over the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability. And there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces, communications, what is your feeling about these news conferences? Are you going to continue one after every meeting? Do you find them useful? What is the future for the way Kevin Warsh will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome. Press conferences can be a very useful way to communicate with households, businesses, and more broadly through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we had something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts, that we're going to seek out the best minds, both the best thinking inside of the Federal Reserve and the best people I know in business and economics and the academy and technology and the rest, to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come. And some of those might well be worthy of a press conference.
Hi, Chris Rugaber at Associated Press. Thanks for taking our questions. Could you give us a sense of how you see inflation more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices in the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy? Thank you.
So I can't do much better than the committee just did. So let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. The paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Well, great. And then just on the data task force and everything else, I mean, generally speaking, I think people feel the Fed looks at everything already. Certainly that was the sense from before. is there data that you feel is not given enough weight? I mean, you mentioned the trim to mean in the past, but again, that's well known to certainly most Fed members. So what is that task force looking at, and what might be I mean, I know you don't want to prejudge the outcome, but are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question. So let me say, I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do, because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. Most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods, a national accounts of what the U.S. economy looks like that looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of our time using new analytic methods. I'd also say this, almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy. What we're really interested in is what's happening right now. What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on, the first Friday after the month, the payroll index or something else, that might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions in real time. I'm really open-minded that there is a lot of new data sources that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than asking a simple question about whether something was core or non-core.
Edward.
Thanks. Welcome, Mr. Chairman. Edward Lawrence with Fox Business. So if you don't give a lot of ongoing forward guidance, won't the markets have more volatility, and shouldn't Americans have more access into what you're thinking going forward?
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information and we're being blind to it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable, and they'll be watching data, we'll be watching data. They'll come with better information through market prices to us. We can make more informed decisions, with ultimately the goal that I said at the outset, deliver on the price stability objective that Congress told us to do, and that we've got to get in the business of doing.
Yeah, if I could take you in the meeting a little bit. So your first meeting, the board members seem fairly hawkish when you listen to, in general, when you listen to what they're saying. Was there any discussion of a rate cut going forward today?
There was one proposal on the table. There was no discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it. It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it furthered the discussion, deepened it, and made it clear what we needed to do and how we needed to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place.
Thanks a lot, Claire Jones, Financial Times. Coming to this blind, reading this very nice short statement that I think we've all appreciated in the room, one might wonder why you didn't raise rates today, considering what you're saying here about the risks to US inflation and your mandate. I guess, why not, and what would you need to see in order to get to that place? And secondly, on your task forces, are there any best practices at other central banks that you'd consider looking at? Thank you.
I'm glad they're in the practice of giving you two questions, because my answer to your first question was going to be very curt. I've got nothing more to say than the statement itself. And to the point of the question I got before, market reactions to what we say unfiltered, I think is more helpful than having delivered a statement, me then improvising further upon it. Best practices of task forces. This is a subject I've thought some about. I've been on a task force or two in my life. Best practice, find the best minds. Ensure that the task forces have a range of people, both by backgrounds and predispositions, so they too can have a bit of a family fight. Make sure when you establish a task force that the group that's going to be the recipient of the information feels as though they've got some equities in it too. That's why we're looking for, haven't done the final roll call, some of the most significant talent we have in the building and across the reserve banks on each of these, and in some sense seconding them to this group for a period of some number of months, so that the leaders of the task force know what the most analytical central bank in the world thinks about that. They can reflect on it. And a final best practice, we're not outsourcing decisions to anybody. Administrations past and present, reserve banks have chosen a group of 19 people around the table. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger, more of a dialectic, so that we can finally deliver on that price stability objective.
Just a quick follow-up on your markets point. If you look at 2-year yields, they're really suggesting that markets think more tightening is needed. Would that be your read on what the 2-year yield is saying as well?
We were in such a good place. This is why we don't do third questions, I presume. I'm not going to offer any commentary on market reaction over the last 30 or 60 minutes. What we've given markets is a new chapter for the central bank, some fresh thinking. What we've given markets and households and businesses, I think, is a commitment to ask ourselves hard questions such that we can deliver on the promises that we've made before. This is a lot of change for financial markets to digest. I wouldn't be particularly intrigued by how they react in the first several minutes or even first several days. What I think is most important is that financial markets, and at least as important, households and businesses know that this central bank will deliver on price stability.
Hi there, Chairman Warsh. Brian Chung with NBC News. Thank you for taking our questions. So when you say that we've dropped forward guidance for the layperson, that might sound like the Fed's going to say less or offer less insight into where their borrowing costs might go. So for the person that maybe you might run into at the grocery store, where the price tags are rising at a faster pace than their wages at the moment, how would you explain it to them? I don't know if task force might be the answer there, but how would you kind of communicate this era, this chapter of the Fed?
If I told somebody in the milk aisle that I had a task force for that, I think that would be doing a very poor job. So I appreciate it. If I saw somebody in the grocery store, what I would say to them is that we cannot have a very significant effect on particular prices. The price of oil in the markets today, or even the price of a dozen eggs, that does not have first order consequences to what we're doing. But we do have a really important job there. And it's to make sure that those changes in oil or beef or eggs or milk don't broaden in the economy, don't have second and third order effects. That's our job. That's our commitment. That's our capability. And we're going to deliver on it.
And then is the Fed's relationship with the Treasury also under review? There was the normal breakfast meetings with the Treasury Secretary. Is that something you intend to continue doing? And have you had conversations with the president since you're swearing in?
So on the president, I don't have anything for you. With respect to the Treasury Secretary, he has been posting pictures of our breakfast. So I don't think I can deny that. The long tradition at the central bank is that the Fed chairman and the Treasury Secretary meet weekly. I think we've pulled off 3 of those so far. I believe he's overseas this week, so this will be the exception to the rule. I think they're very useful discussions. The central bank's objectives and our roles and responsibilities are quite delineated from the fiscal authorities. And in my view, monetary policy is independent in the conduct of what we do. But that doesn't mean we're not interested in what's happening with the fiscal authorities. The way I think about it is this central bank needs to have a wide lens, but a narrow remit. We need to be quite interested in what's happening in the world. I won't be breaking any news here to suggest I'm quite interested in what's happening in the Middle East. That does have some effect on our day job. It doesn't mean it's our responsibility, but I think we're going to keep a wide lens, and my meetings with Secretary Besson to this point have helped widen that aperture. So we're aware of things that could affect our day job, even if it isn't.
Steve Leisman, CNBC. Mr. Chair, thank you. Mr. Chairman, thank you for taking my question. You had said in the before you became chairman that you thought productivity was a reason why the Federal Reserve could lower interest rates. Do you still believe that to be the case?
So the committee had a discussion of productivity today. AI came up. The way I thought about it before and socialized with the group is that artificial intelligence, the latest generation of general purpose technology, is perhaps as important a change in the economy and business and households that we've had in my adult lifetime. It is filled with both a huge opportunity and with risks. I take both of those very seriously. You may have heard me say before that AI is shorthand perhaps for American ingenuity. That doesn't mean that it's going to be easy. That certainly doesn't mean it's not going to be disruptive. But over the long term, my conviction, and I heard quite a bit of support for this around the committee today, is the United States is a winner as we go down this. The United States is ultimately going to be better off in that. Now, to bring that back to the conduct of policy, timing, scale, speed, implications for output and employment, it's one of the things we have a task force to do.
If you don't mind, a follow-up from the other side, which is that when you look at the strong job growth that's out there, the elevated inflation, GDP seems to be going pretty good, and the stock market seems to be soaring. Do you look around this economy and see the funds rate being restrictive?
So that's your second question. I'm going to give the same answer that I gave before. I'd say as I think about the conduct of policy, what matters is what's the effect of policy. Not what do we say, but what happens. And the best way I can describe is it's uneven. I do see some restrictiveness in things like housing. It's hard to use those same words anywhere else. I'll just make one other point. You talked about one of our dual mandates on the employment side. I don't believe that we have a cruel choice. I don't share the view that was expressed a few generations ago that Federal Reserve chairmen show up at a podium like this and say, you got to choose. And you're going to have to decide whether you're willing to tolerate higher inflation to put more people at work. I don't believe in that. What I believe is if we do our job, we can make strong growth, low prices, and strong employment mutually compatible. And so what you heard from the committee today is we've got some work to do on this price stability front.
Nick.
Thank you. Nick Timmeros with the Wall Street Journal. Chairman Warsh, you've said repeatedly credibility is earned by delivering. If credibility requires delivering, the move would be to tighten or at least to threaten to. Now, you didn't do that today. Why not?
That judgment you expressed was not expressed by any of the 19 people around the table. We'll be meeting in 6 weeks. We'll take up the issue again.
And if I could ask about AI, the build out is generating enormous demand right now, CapEx, data centers, power. The productivity payoff may be further out. So in your judgment today, is AI adding more to demand or to supply?
It's a good question. At the central bank in an economics profession, what we spend most of our time doing is counting demand. It's easier. We can see it, we can count it, we can check it, we can revise it. What we do, though, is we infer supply. You'll notice in the second paragraph of what one of your colleagues described as a very short statement, we have a sentence on the demand side and a sentence about the same length on the supply side. They're both important. Just because we can count one better than the other doesn't mean we're going to favor one more than the other. With respect to AI and the growth of data centers and infrastructure around it, we're counting the demand side, and it is no doubt showing up in GDP figures. We can be less certain when we infer the timing and extent of the growth in the supply side. It may well be an intuition the supply side is going to expand, but it'll take longer. I just describe it this way. There's a race between supply and demand. Milton Friedman says that the only thing we know about economics is that there's a supply line and a demand line they ultimately cross. When they cross and what are the implications for policy? The good news for you is we have a task force for that.
Andrew.
Thanks, Mr. Chairman. It sounded like on the task force on data that you were looking at overhauling or completely overhauling the system of national accounts, the way the government mines the economy. Is that your ambition?
In a word, no. In a few words, much of this data gathering happens in other government agencies to which we owe a tremendous amount of respect, tremendous amount of deference. But if in the course of this, we come up with recommendations, which Fed staff have already begun to develop about things that they could be doing to help inform us as policymakers, we're not going to hesitate. Again, I don't want to try to delineate the four corners of the research of the task force on data, but I do think there will be a review of official statistics, and at least as important, a view of bringing the best practices from the private sector and new analytical tools made possible by AI so we can forge these into a fabric that gives us better real-time information. So as I mentioned before, when we're making decisions that we'd say are real contemporaneous data, not data that we call contemporaneous, that's really an echo of history.
Okay, thanks. The other question I wanted to ask is related to the building renovations. Are you considering any changes to the renovations, the projects, just in light of the fact that they became kind of a political football in the last year?
I heard something about that. I don't think I'm breaking any news, but my view, when you show up at a new institution, you should go meet with the inspector general, just as a matter of good practice. It's a practice that I hope to continue. I've had one meeting with the inspector general, and he told me what I believe the world knows, which he'll be coming out with a report on the building and the building projects at some point later this summer. I'll be interested in reading the report. From my perspective, with a forward-looking glance, is there anything that we can be doing or should be doing from this moment until the completion of the project to do what we can to be good stewards of taxpayer money and make sure that we're delivering on the promises that we made? Some more work to do. You might not be surprised in the first few weeks. I've been somewhat preoccupied on other matters, but I promised to get to the full breadth of the Fed's tasks in the weeks ahead.
Victoria.
Hi, Victoria Guida with Politico. So I know that you did not submit a forecast, but you are the person who is authorized to speak on behalf of the FOMC. So I'm wondering if you could tell us in the SEP, the increase in the expectations for inflation, is that all because of the Iran war? What was the discussion around what would the expectations for inflation being higher and also potentially growth being slower?
So my read of what I heard in the room reflected, I must admit, in the SEPs, is half of my colleagues thought the policy rate, given all those developments, should be at this level or lower between now and year end, and the other half thought higher. That 19th voter was me, and I didn't submit one. There's a range of views on the questions of first and second round effects, no resolution or conviction, but we'll be meeting again in 6 weeks. I think we're going to know more then. And I think that my colleagues are very attentive to incoming developments between now and then.
And can I just quick follow up on the SEP? You said that you're still encouraging your fellow committee members to submit forecasts even if you're not doing it. So what do you think is the benefit of them doing it even if you don't?
That's the commitment that the FOMC made, and it's a commitment that I hope we live up to. Commitment we made was to deliver price stability. I expect us to live up to it. By the time we get to the end of this year, as I mentioned, I wouldn't be surprised if there was a new communications framework. There were some changes to the SEP. That's a committee discussion, a robust discussion. I think we'll have it. I believe we're going to come to a better mix of communications to deliver on what we promised, but I wouldn't want to prejudge what those are. But between now and then, I would continue to expect colleagues to submit their SEPs. Some of them, I think, believe that the practice is currently structured is okay, but I heard a lot of interest in real reform, generally about all these topics. You didn't ask it, but I'll answer. It was a pretty gracious couple of days, and it's been a pretty warm few weeks. The institution wants to figure out how we can do better. The institution's going back to first principles, and I'm encouraged that what we've done in the statement, what we're thinking about doing with respect to the SEP, that instinct towards a new chapter is a real one. And by the end of the year, I hope we can put some points on the board, both in form and in substance of delivering.
Going to end up for the last question.
Thank you, Mr. Chairman. Andy Curran, Bloomberg News. Could you guide us through, please, some of the principles that guide your own reaction function, and tell us a little bit about kind of conditions that you think when the Fed should respond?
It's going to be a very unsatisfactory answer to the final question. The Federal Reserve has a lot of responsibilities, not just in monetary policy, but in supervision and regulation, consumer affairs and payments. My own view is our credibility comes from delivering on what we're saying we're going to do across everything we do. I've devoted more time in my first 3 weeks to monetary policy than all those things. But the more we deliver on our promises as good supervisors and good regulators, the more benefit we get, the more credibility enhancement we have in monetary policy. When we deliver on our price stability objectives, which we will, the American people will feel as though the hardships that they've been living through, in part because of inflation the last 5 years, are in the rear view mirror, and that credibility will have dividends across what we do. And the institution will come to press conferences like this, always with an impetus to reform, always with an impetus to do better, but we're going to put some points on the board.
Mr. Chairman, we've got strong labor data in recent months. How would you sum up the labor market right now? Do you see it as stable and as potentially a source of inflation? Thank you.
Yeah, so the committee, if I were to try to capture how the committee thought about it, the committee thought that the labor markets were stable. There were some people around the committee who thought that it was trending better than that. Trends matter more than data points. What's happening over 3 or 6 months matters more than any one data point, any one data release. And I'd say the jobs data has been moving in a good direction. If I heard one other thing around that subject over the course of the last couple of days, what I heard was that strong productivity-led growth is not something that we fear, but something we embrace. Thank you all very much.
All right, folks, that was the first official meeting of Kevin Warsh, who is the brand new Fed chair. Farzad, thank you for being here. Appreciate the super chat. Shout out to Farzad, great friend of the channel. Well, that was quite the meeting. I think there's a lot to discuss and a lot to analyze here. Markets are taking a little bit of a dumpy dump. I wonder how aggressive it's going to be. Most of the high beta names, quite frankly, have held up throughout the day. So would not surprise me to see some green candles coming in like we're seeing right now in the S&P. 746.90 as that one is still down 0.5%. Robinhood, just an absolute champion, trying to go for 110 again. Nebius, 300 almost. Didn't touch 300 yet, but 295. Meta getting dumped. SpaceX getting dumped. Google getting dumped. Microsoft getting dumped. SoFi at one point was quick to potentially lose 1803. Now right back to 1820. And Microsoft right here potentially going below 380. Very interesting levels of analysis here that came from Kevin Warsh on a variety of different perspectives, inflation, the labor market, etc. And, you know, the market's the market. The next 45 minutes are really going to determine how the market has interpreted everything that Kevin Warsh said. But I think if we take it from a high level, I liked it. I liked it a lot. I liked what he said a lot. One of the things that I think so many of us have been worried about with the Fed over the past few years is that the Fed keeps saying they're data dependent, but they don't actually look at real-time data. And so when you look at such lagging indicators like owner's equivalent rent, which, you know, every 6 months changes and you're using it, which means you're 6 months behind every time you try to make a decision, it makes you wonder why in one of the richest countries on the planet don't we have real-time accurate sources of data? Obviously, this is going to become a meme, but I think Kevin Warsh made the argument that task forces are going to try to find the most analytical ways of coming to conclusions around price stability, which would include these the subsidiaries of the labor market and obviously inflation. I don't know what these task forces look like. I don't know if there's technology associated with them. I don't know if it's a bunch of men in black that knock on people's doors to try to find out the truth, or is this a more data-driven, software-oriented approach? The idea of Pounter really does come to mind here, where the Fed is going to actually try to figure out what are people paying for rent? What are people paying for groceries? How does the price of oil actually impact the mortgage rates? And how can an institution like the Fed have a meaningful impact on monetary policy? The fact of their statement coming out today being as short as it was kind of already gave you a clue that the Fed is not interested anymore in giving what Kevin Warsh continuously referred to as forward guidance. They want to try to find the truth. And you know, markets might go down in the face of finding the truth, but it's way better than markets to be artificially up or down based on the perception of, oh, this is what the dot plot says, or, oh, this is what the summary of economic projections is implying. In fact, when Kevin Warsh was asked about, hey, are you going to be delivering your thesis on the summary of economic projections, he basically said in the future, no. He's like, if other committee members want to do it, they could do it, but I don't have to do it. No one's going to force me to do it. And I philosophically don't believe that it's worthwhile to spend the time actually trying to do it. Now, there's a lot of different nuances to this. The dollar is getting a bit of a pump right here, 100.2 on the Dixie as Warsh spoke. And obviously S&P is going a bit red. Bitcoin's a little red. Gold and silver not really having the best. Wow, gold actually fell a lot. Gold down 2%, silver down 2.3%. So maybe the task forces are not the most bullish for some of the commodities, as you know, one could argue if the task force tries to find a better way to find the truth than the typical way that people trade or think of how these commodities are placed in the broader ecosystem of macro assets, that also has to change. But overall, I liked that top line overview of Warsh basically saying, I also thought he was an eloquent speaker. I thought he had some charm. I think he was a little funny. I mean, like you want a Fed chair that can actually interact with the media in a meaningful way, because at the end of the day, they're going to be covering him for the next 6 years and asking a lot of his questions. I think the task force, if it becomes a legit thing, and you know, there's multiple different task forces that he talked about, probably guided by AI. He spent a lot of time talking about AI being deflationary, AI being a technological revolution that we can't ignore. If you put all that together with his new approach for the Fed, I feel like there are brighter days ahead for how we think about the Federal Reserve. What do people think? Do we like him? Do we not like him? Do we think he was bad? Do we think he's just BSing right here? Obviously, the market is going to be the market. And I mean, I think the algos really kicked in when they asked that question about, are we cutting this year? And he basically said no without, you know, saying no. He did say there was one person who recommended a cut. I think he was implying himself, but the committee didn't really want to talk about that. So they came to the unanimous decision. And as soon as that question was asked, I think the algos kind of was like, oh, cut, no cut, boom. All right, going down. And so that's probably some of the price action you're seeing right here on the S&P 744. But I don't know if that's fully a reason to be upset. Now, again, markets, they dump all the time on these Fed meetings. I don't think there's really anything specifically that he said. The real reason to be mad that markets are dumping, if you want to attribute it to the Fed, is 9 out of the 18 FOMC members are calling for a hike in 2026. Now, Warsh kind of addressed that by saying we will further negotiate and think of different solutions. And he talked about the Middle East and energy crisis, all that stuff. So I think eventually that will change. Markets are obviously going to be short-term and react to the potential of it being that bad. With 9 out of 18 wanting a hike. But if that doesn't happen, which I would imagine doesn't happen, then, you know, this reaction is a bit more knee-jerk. All the software names, unfortunately, getting hit as the S&P goes down. The worst part about this year has been that the SaaS names only go up if there's like a miracle that happens. And then once that miracle is over and the markets go down, the SaaS names don't get any rotation. They go down as well. So ServiceNow, Zeta, Palantir, ServiceNow losing 100 pretty badly. Adobe is also down. Salesforce is down. Some of your semis are holding on. AMD, is that green? AMD barely green. Micron is very green. Micron loving Mr. Kevin Warsh. ARM ran away during that meeting. Look at ARM, 10% up on the day, 437. HIMS also great day, 33. This one hasn't closed over 30 in a couple months. Yesterday got the close. Today, hopefully it gets the close again. Intel, that's up 5%. SanDisk back above 2,000. Rackspace, that's up 31%. EOSC, great day. That's up 15%. Amcor, that's still up 3%. So some of your core semi names, ASML, that's up 5%, are great. Most of your semis are down. A lot of your Mag 7s have basically been priced as if they're going to zero. Are they all red? Yep, they are all red. Google, Amazon, NVIDIA, Tesla, Apple, SpaceX, Apple, Meta, and Microsoft. NVIDIA, why not 205? Why not? I just wouldn't blame Kevin Warsh for this. Maybe I'm being too nice, but I wouldn't blame Kevin Warsh for this. Now, I will say, as much as I love Hood and Nebius, for them to be up as much as they're up today, and for every other large cap semi and Mag 7 and software company to be down, is interesting to say the least. It's either people want to rotate out of the laggards and just pile into the things that have momentum, or this is a head fake. And there's a lot of exit liquidity that's being used right now on some very high beta names, and people are getting the hell out. And I don't really know, because this is very weird price action. Look at the S&P, dude. We just lost 744. And I know Hood is losing 110, but man, 107 is still a big move. Nebius 290 is still a big move. So it either speaks to the strength and the quality of those two companies, along with some of the other semi names and your core weaves of the world, or, you know, that move up there was a bit exaggerated and we're going to see it consolidate. And, you know, usually you kind of want to see the S&P doing well to see some of those high beta names do well. If they go the opposite, it just doesn't tend to always work out. But a lot of those names going the opposite direction. SoFi loses 18. Rocket Lab lost 109, but that was 110 as that continued to hold on to it. Broadcom also getting a bit more of a hold as well. SPY officially is now down 1% right here. I don't know, man. It's interesting. Does anyone else think it's interesting price action? Like, a lot of this stuff, you're not getting everything going red, even though SPY's taken a pretty ugly dump from peak to trough. SPY officially down 1.1% on the day. Even Keel, that's a super high beta name that you would think would struggle to hold $6 today. It's holding on like a champ. We got 40 minutes left, but a lot of the large cap names just getting hit pretty hard. I was worried when we were so green before the meeting. Yeah, no, that's fair. Nate says Nebius has been strong all year. Yeah, but Nebius was at 204 a couple weeks ago. You know what I mean? Like, it's not about the relative strength of a name in a yearly cycle. It's about the strength in the intra-weekly cycle. And Hood, as much as I love Hood, dude, this is a massive, massive move. And, you know, no one wants to buy it if it's going to take a massive dump. So I'm left questioning what is happening here. For all the people that are asking, we talked about in the morning, prediction markets volumes are strong. You got some price target increases that came out. Obviously, you've had the insider buying. There's not that fundamental major catalyst that I think is pushing Hood up outside of their June volumes being good. SpaceX, brokerages, all catching a bid. I don't know if there's like that massive big piece of news that would shift Hood up. Same thing with Nebius. Obviously, the Neo Clouds have caught in a bid from the tokens that are coming down. But it's just interesting to see some of these very high beta names go up and the large caps completely take a dump. I mean, you would think like a Microsoft wouldn't be down 4% when the most volatile names in the market are up 12%. Like, you would think Microsoft would at least be up like 0.03%. And like, that's such a big disparity. I think, quite frankly, I think this is one of the only days this year where we've really seen that large of a disparity. If not, it's been a sector-wide disparity, but in this case, it's individual stocks. NVIDIA 204.70, while the neoclouds pumped to all-time highs, is just a little weird. Maybe it's normal at this point. Maybe people have maybe people have legitimately said there is no point to buy the large caps anymore, and that's the rotation. Amazon 237, that's again weird, but if you're in high beta, you're doing well, and it doesn't continue to affect you as much. Traders fully priced in Fed or interest rate hikes by October. Okay, so that's probably part of the reason we're seeing a little bit more of a dump right here. Again, I do not think we are going to get the hike, but Warsh didn't really deny it, even though he, in my opinion, did a good job with talking about the reform of the Fed. If that still requires some level of a cut or a hike, the market's not going to love that. Wow, Microsoft 379. Trump did comment on the Fed. Here is what he said as he was on his way to leave France. Here you go.
Say it.
The Fed decision, they held rates today.
It's all right. Whatever.
And it looks like they might even raise them later this year. It's not clear. Do you have any comment?
It could happen. I mean, it's hard to believe. It just keeps a country down, so it's so unusual. But we have a very good guy over there now, so I'm guided by what he wants.
Trump wasn't too upset. If this was Powell, he'd probably be saying too late Powell, all those things. He's saying we have a very good guy over there. He's saying it is what it is, not giving a nickname to Kevin Warsh, implying that he's a loser. Not anything too dramatic yet. He's obviously annoyed, but I think he also knows that this is going to be a long process.
So I'm guided by what he wants. Was this his first time? Yeah, I don't know. I saw a statement. It just came out.
Do we have any clarity on when the deal will be signed, when the memorandum
over the next, I'd say 48 hours.
48 hours and 50 then?
I'd say 48 hours. We haven't determined yet. It's in final form. We haven't determined. What? So I'm guided by what he wants.
You're not getting aggressive Trump with what he's saying. You are getting the market, I think, reacting to that potential hike in October, which again, if we get a hike in October, that would give you, so if we're legit getting a hike in October, which again, I doubt, but let's say we are, well, I think the market would figure that out by like August. And if that happens, that could line up your midterm correction that people have been talking about leading into an October bottom, which would culminate with the hike being the bottom, hopefully. But then again, I also wonder how likely it is it for us to actually get a hike. Again, if oil keeps coming down too, like these ideas that the market is having a knee-jerk reaction to right now as you're seeing the price action, I don't know if they become as aggressive. Like I just personally don't think we're going to hike. I really don't. Also, Warsh didn't even talk about these like underlying structural elements of inflation that are so persistent in the economy. He didn't even mention any of that stuff because I don't think he believes in it. I don't think the Fed thinks it's there outside of what's going on in the Middle East. Marvell right there, 300. That's up 7. Hood lost 110, but holding on to the hundreds. It's definitely going to close triple digits today. And Nebius likely will close at least above 285 today, as that is 290. Warsh said that he sees restrictiveness in housing, meaning that he realizes the housing market is frozen, thus he wants to lean towards cuts. Well, it's no surprise that Warsh is leaning towards cuts. That's why he didn't put out a summary of economic projections. He was the only Fed governor that didn't do that. The problem is the other Fed members are leaning towards hikes. And, at the end of the day, he's not unilaterally in control of the Fed. SoFi right there loses 1870 to 1791. Microsoft, this is just incredible. Again, on a day where some of the most high beta names are up 10, 15%, I just wouldn't expect the Mag 7 to be decimated the way they've been decimated today. And we're talking about multi-$100 billion market cap moves to the downside on the Mag 7s for no real headlines. None of them did anything today. And all of them have enough cash. Like, yeah, I know they're borrowing money, but interest rates affect the high beta names way more than it affects companies with hundreds of billions of dollars in operating income. So the fact that they're being sold off here is just, it's incredible to see. Rocket Lab right there, 109.21. Where is SpaceX? 196. This one's been stuck around 196 to 197 all day. Oracle, that one goes back below 185 as that goes red. Oh, well, you did have a headline on Meta right here. Meta's head of product for AI work transformation leaving the company. So you had a executive departure from Meta. That was a few hours ago, so I don't know if that's causing the problem right now, but that could have been a reason why the market's upset at Meta. Wow, S&P. Lows of the day, folks. She's really going for it downward. What did Kevin Warsh say? I just joined. He said that we are reforming the Fed, and the goal of this reform is to make sure that we have task forces that can analytically find the truth about price stability, which kind of sounds super academic and not practical. But the point is, he said, we're going to try to reform the Fed and try to have more reasonable ways to get to the truth when it comes to data. I also don't know how the market is supposed to react to that. Like, it sounds like a cool idea. I would endorse it, but I think the market's just like, practically, what the hell does that mean? And, you know, the final question was asking about volatility of like, wouldn't it be more volatile for the FOMC if you guys didn't give projections? And I really liked his response. His response was like, no, let the market figure it out. Like, do not depend on us and what we say from our ivory tower about our theoretical interpretation of what's going on with inflation in the labor market. You guys should use market forces to come to broader conclusions. S&P really getting hit now, 741.78. And I think that makes sense. But the market might not fully like it. Most of the Max 7s at 52-week lows is the worst manipulation ever. It's all pump and dumps on the other high beta names. It's definitely weird. I will say that. It's very weird to see the large caps get sold off like this. Microsoft 378 as that's red. Where's oil? Oil is at 76. So that one's not even pumping right here. Let's hear from Jeffrey Gunlock and get his thoughts on how Kevin Warsh was.
What it was. The good news is that our model shows that inflation will be dropping along as we move towards the end of the year, and based upon the commodity complex today, could be as low as 3.5. I thought it was very interesting that Warsh said that he looks to the left of the decimal point on the inflation numbers. And, you know, he says the one that's left to the decimal point on our target is 2%. Well, what that sort of suggests, I know for years, there's been talk about maybe the Fed will raise their inflation target. It doesn't really mean 2, maybe 2.5 is okay. That's kind of what he said. I mean, if you really want to take it to the extreme, if it goes to 2.99, the number to the left of the decimal point is a 2. So I wonder if we're really talking about that price stability of 2. Also, one of those task forces is about inflation statistic frameworks. And he talked about old data is an echo of the past, and he wants more real-time stuff. What that could open the door to, if you want to be cynical or a conspiracy theorist, it might open the door for creating new inflationary views, new inflationary readings, new inflationary techniques, which could perhaps, if you're a cynic, facilitate the road towards the proclamation that we've delivered on price stability. It was fascinating that there was like one question on the unemployment rate, at least that I heard. I didn't hear the entire press conference, but that last question on the unemployment rate, it's very clear, the total package of that press conference, it's very clear that the focus is on inflation and not on unemployment or the employment market having problems. He in fact said that the committee believes that the employment conditions are solid, and even that half the committee thought they might be getting better. That further distracts you, like a magician's trick, distracting you from what's going on in the trick by focusing your attention on the other hand. So, but I really, what a change in tone. I mean, it sounds to me like just perhaps the Fed is no longer going to just be following the 2-year Treasury. I did a study on this. It goes back about 20 years. Of course, the Fed followed the 2-year Treasury completely for 20 years. And maybe that's not going to happen anymore. And I saw this fantastic chart. I think it's the best chart of the present moment from JP Morgan Asset Management. And what they did is they went back 55 years and looked at all of the Fed moves in the Fed funds rate. And they did a scatter chart, and they had red dots, which were tightenings, and blue dots, which were easings. And they basically, on the x-axis was the ISM Manufacturing Employment Index, and on the y-axis was the ISM Manufacturing Price Index. And if either of those are above 50, if the employment index is above 50, then it's strong. And if the price index is above 50, it means prices are rising. So what the scatter chart shows is that as you move from the lower left, when you start in the lower left, you have much more chance of easing because you have weak manufacturing employment and you have weak prices movements. And as you move up to the upper right, it's mostly tightenings. Well, what's really interesting is that in the 70s, there were some blue dots in the upper right. That was under Arthur Burns when he was under pressure by Richard Nixon to cut rates for political reasons, and he did it. And then interestingly, in the lower left, there are actually 3 tightenings. Those are under Paul Volcker. So in spite of the fact there was very weak prices paid and very weak employment, Volcker raised interest rates, and he didn't raise them following the 2-year at all. You'll remember the people talk about the Saturday Night Massacre, where on a Saturday night he raised rates mightily. And he actually, Volcker, from 1973, June of 73 until, June of 79 until June of 83, Volcker was just all over the place relative to the 2-year Treasury. When he raised rates for the first time up to 20%, the 2-year Treasury never got above 15%. And when the Fed, and later on in the 80s, in the earlier 80s, when the 2-year Treasury was rising above the Fed funds rate and rising, he didn't care. He kept rates where he thought they should be. And I'm wondering if Chairman Warsh is going to be a little bit more agile, as I like to put it, like Volcker was, and not so slavishly tied to the 2-year Treasury. I mean, if he was really tied to the 2-year Treasury, I know he wants to buy time. He's getting himself settled in, but he would have raised rates today. The 2-year Treasury is 50 basis points, more than 50 basis points now above the median of the Fed funds rate. So if he's following the 2-year, he might have moved. But he knows, as our model knows, that inflation is going to be coming down into the 3s, perhaps maybe even 3.5 by the end of the year. And if oil goes even lower, it could even go down to 3%. So in that way, he's on the track to price stability. And so he's bought himself some time to sort things out. And now we've got some consultants that are going to help out, which I'm not really a big fan of consultants, but he wants to put his imprint on the Fed, and he certainly has an ambitious agenda. And I applaud him for being original. I felt like the last 3 times we turned over the Fed chair, it was just a baton being passed, and the methodologies basically weren't adjusted or even considered to be adjusted all the way along from Bernanke to Yellen to Powell. So this is a new era, and he definitely is making no bones about it. So we'll see.
Look, I agree with a lot of what Gunlock is saying right there, primarily from the angle that price stability is going to happen based on a new approach, and that it's important that we have a new approach because we haven't had a new approach in a long time, as the Mag 7 continued to take just an ugly dump. SpaceX trying to hold on to 194, touched 193. And then on top of that, he's calling the consultants the task force. The task force is like being framed as the consultants, which hopefully they're not literally just consultants. But I think there is a real opportunity here where you can implement a task force and there's like some meaningful technology that can get the job done. Nonetheless, markets are still not a fan of the 18 people that voted for a cut and, the 9 out of 18 people that voted for a hike. And I think that's where we're going red. At least here on the day. Hood trying to hold on to at least 106 as that's up 10. Nebius losing 297 to 284. Still a massive day, up 7% on Nebius. Micron also up 5% right here. AMD, that's up 1%. Many of these, NVIDIA, I just don't know what to say about some of them now as they continue to go down, but it is what it is. Some of these names, it just feels like they want to break down and maybe they really need a flush out. Q's down 1%, which is probably also not helping, but a lot of the other high beta names don't care. and they're moving on. Allbirds, we talked about that in the morning. That's up 41%. SoFi completely fell out. Wow, 1760. This one got smacked pretty hard as that goes down. Oracle down 2.5. SpaceX 193. We are at lows of the day. If we lose 193, 193.10, it's almost look out below. Oh boy, 193.06. Did anyone buy SpaceX today? Anyone buy the dip here? 192. There she goes. There she goes. Are we going for 191 here? Is anyone going to step in? 192.55. Circle's up 2.8%. Bitcoin was okay. Goodness, just getting spacked here pretty hard. I bought 2x shorts on SpaceX. Yeah, those 2x leveraged short ETFs have just gone absolutely bonkers. Last 20 minutes of the day, now you're really seeing a bigger dump across some of these names. Robinhood losing potentially 106. Nebius just lost 284 down to 282. SPY, wow, dude, loses 740. Okay, now that's actually a red day. 1.5% is like legit red. like that's like red. I mean, this thing was 750. We were pushing 750 when Warsh started talking. Meta under 570. That's a no-go. As that goes down, Oracle down 2.3. SpaceX. Oh no, it hit 187 today. I forgot. So that's the low that it might try to sweep if it actually gets there. Where is Netflix? Wow. 76.89. Again, for those who are wondering why the dump, the main thing is not really what Warsh said. It's what the Fed members basically implied, which is that they don't think we have any chance for a cut this year. And in fact, they want hikes. As you have quad witching coming tomorrow as well. Yeah, that's also something to not forget. Oh my goodness, is STRC actually at 89? Is it? Whoa. See, this is what confused me. If you bought this thing for the free quote unquote 11.5% yield, and now you're down 11%, literally, you're down 11% or 10.15% on the asset, your whole yield is gone. If you buy something at 100 and it goes to 89, you're down 11%. But if you bought it at 100 to get the 11% yield, the par value of your shares have effectively become zero. So like Saylor needs to do something to get people to, stay in strategy. Obviously they're dumping it right here, which is why this is going down, but it's supposed to be pegged to 100. Bitcoin, is that because, oh yeah, that's probably why Bitcoin, this was 65 during the Fed meeting. Pretty ugly dump right there. Goodness. What if you buy right now? So if you buy right now, I still think you get, don't quote me on this, but I believe you still get the 11% yield, and then any upside from 89 is yours to keep. It just begs the question, wow, SpaceX, she's losing it. She's losing it bad, 191. Just begs the question, is it worth buying something that was supposed to be pegged to a certain value and then just lost all of it, right? Like, does that make sense? SpaceX 191. Definitely was a fake pump in the morning on a lot. Did CoreWeave actually go red? Did it? Wow, CoreWeave went red. Yeah, so a lot of a fake pump in the morning, and it kind of stayed through the beginning of the FOMC decision outside of SPY, and now you're seeing some of the SPY, the high beta names actually go down. Robinhood 110 to 105, still up a lot on the day. Nebius still up a lot on the day, but obviously they're losing a lot of their momentum. Even though oil's at 75, I agree. Like this whole oil thing ended up being a sell the news. It ended up being an aggressive sell the news as the market didn't care. ELF, is that down? That's down 7. T1 Energy, that's up 6, but it was up a lot more. You just never trust the Fed on FOMC days. You really can never, or you can never trust the market, but also you should never trust the Fed, because I didn't think 9 out of 18 of them would say we want to hike. 9 out of 18 saying that felt a bit stronger than what people thought. Let's get a little bit more coverage on this, and then we will get into the close.
Where it needs to be. Once he deals with that, he can get on to what it sounded to me like a very ambitious plan for reforming the Fed, Scott.
I also think you can believe that because he underscored the points that he did so strongly about price stability, that he needs to, think about the credibility of the Fed itself. He can't make those kinds of comments and then not be true to them down the road should inflation not go down like he thinks it, and Jeffrey does as well, ultimately will. He may be forced to do something that many people didn't see him doing when they first thought about this gentleman being the next Fed chair.
Yeah, I mean, I didn't really have a problem with that. I thought he would say certain things that he could say and probably still believes when it comes to the outlook for interest rates. But look, you can't be a central banker and not be concerned about inflation having a 4 handle, even when it has a 3 handle. You have to be concerned about it if you're going to have your license to be a central banker. Otherwise, it will be summarily taken away. When you look down the road, Scott, he has said in the past, inflation is a choice. That was a choice that was made by the Powell Fed up to this point. Any future inflation is a choice of Kevin Warsh.
Interesting. Steve, thank you very much. That's Steve Leisman, emerging, of course, from that news conference. We'll go back to Jeffrey Gundlach. And Jeffrey, how much of what is unambiguously, I'll use it myself, the dot plot being more hawkish, 9 members projecting a hike, 5 seeing 2, 1 seeing 3, 8 projecting a hold. How much of that do you think is around the idea of jawboning the market a bit, rather than actually following through on a hike, which would have a much more serious impact on certainly on equity prices, not even counting what bond yields might do?
Yeah, I agree. Jawboning is probably a good word. I call it buying time. I mean, I think if you put a couple of members with two rate hikes by year end, and you've got a third one with 3 hikes, that's a pretty good jawbone right there, because it suggests that there could be some significant movement should it be warranted. The thing is, a 2 handle and a 3 handle are very different things on inflation. For the past 20 years, inflation was going up until COVID, until 2020. Past 20 years, the core CPI was going up exactly at a 2% trend. It was amazing how it didn't really deviate, even on a monthly basis, hardly, from going up at a 2% clip. And then COVID came and it went, obviously the slope got much steeper. But now if we're going to get, for the fullness of time, from 2024 or 2026 rather, up to 2031, if we're going to have 2% be the actual inflation core CPI trend over that 25-year time period, you would actually need the inflation rate between now and 2031 to be 0, absolutely 0. And if you wanted to get back to that 2% trend line for the fullness, for 10 years forward, it'd have to be a 1% inflation rate for that entire period. And if you wanted to get there by 20 years from now, you would need inflation rate for all those 20 years to be at 1.5%. So that's what's so dangerous about saying, well, 3's not bad. It kind of sounds like 2. No, they're very different. The thing about compound interest is how much more powerful it is than people's intuition usually informs them. So I think that this 2% inflation thing has been so out of whack for the past 5 years, and Warsh started out with that, saying we've been nowhere close to a price stability for over 5 years here. That just shows that he realizes the big difference between a 3 to the left of the decimal point or a 2 to the left of the decimal point, and he knows we need to get there. And I applaud him for that.
All right, markets trying to understand the nuance of what he's saying, but obviously we're still getting hit right there. Robin at 105.84, trying to hold on to 105 right here. SPY, at least we got above 739 at 741, but that's still still a rather ugly day. Marvell, that's up 6%. That's down from 300. Broadcom up 4%. Nebius 287. HIMS 3194, trying to hold on to 34. BMNR likely getting destroyed. It is indeed getting destroyed as ETH is getting hit. SpaceX barely holding on to 150 or 193. Just a weird day. Like a really weird day. Just across the board. Obviously, the reaction from the Fed, we all knew would be a whole different paradigm for how the Fed is thinking about this stuff, but genuinely a weird way to see how the market has been thinking about this. We're going to get everything from the task forces. Dude, the task forces is officially going to become one of the best memes out there. It is going to become one of the single best memes that is out there. There's no way it doesn't become an amazing meme. SPY 741, ELF down 7. Salesforce, oh my goodness, dude, down 4. Why is this happening? Once again, a new Fed. Markets have to react to how this new Fed, or how they think the new Fed is going to be and govern. He said a bunch of things that sounded practically kind of cool. Realistically, I think the market doesn't know what to do with it. And then finally, the level of participants that want a hike, I think, was unprecedented today, especially given how much inflation came down, and still that's happening. Microsoft 378. 378. Your TA guy said CRM was a sell, didn't he? I think my TA guy did tell me that CRM was a sell. I think he did say that. Yeah, this is ugly. This is ugly. Ugly price action here today. Software needs a task force. 100% software needs a task force. That would be probably really important if we could fix software with a task force. Palantir 130.3. As that continues to go down, Microsoft is still getting hit. Hoodie now almost losing 105. It's 18 cents away from just dropping below. Last minute candles and SPY. CRM lowest since 2022. Is that correct? We know Adobe hit those lows since 2022. Yeah, CRM lowest since 2020. No, you're right. 124 in December 2022. So it's still not at those lows, but it is basically acting like one gets there. Robinhood loses 105. Man, what a freaking reaction across the market today, dude. Across everything. ELF right there, that's down 7 as well as that's getting hit. Jason, I see you in the chat. I will send you a link if you want to hop on and give any quick thoughts of how you thought of this. But, from a fundamental perspective, it's one of those things where there's not much you can do other than realize how the market or try to analyze how the market eventually is going to navigate a new Fed chair. A new Fed chair who I don't know if the market likes him or not yet. Palantir, this one was pushing 135 today. I think this is what people mean by a fake pump today. This was pushing some high levels. And then it just went all back. Does this change your strategy in the stock draft? Not really. I still feel like the strategy is going to be semis. Like everything going down right here is not a function of like the AI thesis being broken or it's all a function of JPAL being, or not JPAL. I'm so used to saying JPAL. It's a function of the markets not knowing how to deal with Warsh. And we have quad witching tomorrow. That is also true. So there's just a lot of shit we have to deal with going into tomorrow. Robinhood 104.95. SpaceX once again losing some of these core levels here, as that one's just getting completely completely hit. Fake pump or fake dump? That is also a good question. I mean, I feel like we had both today. I kind of feel like a lot of this is an overreaction to the task force more than anything. I don't know how legit this actually is, but the morning pump was definitely fake on a lot of names. So some of those names still holding on to it, but SpaceX at 2:05 in the morning probably was a little bit more fake than not. We're getting washed out. That's going to be the new thing. We are getting washed out. SPY once again loses 740. Once again loses 740. And then hit 739. Zeta down 5 as well. Oh my goodness. Ugly, ugly, ugly. Ugly, ugly, ugly. And again, I think the other interesting thing about this today is there was so much hype around how Kevin Warsh would become a new Fed, or about how he would govern as a new Fed chair, that the focus is more on his new policy shift, what he even said about inflation. And I feel like the markets are trying to somewhat figure out how to digest that. Look who's joining us here. Let's bring him on to the show, ladies and gentlemen.
Oh, what's up, buddy?
What's up? What's up? What's up?
You hey, come say hi.
Oh, we got a little guy.
We got a
little
visitor.
guy.
Who's that? Say hello.
That's how I feel about
Is
this
that right?
market, bro. That's how I feel about this market.
Say it again.
Yeah. Dude, I feel you. I feel you.
That's about it.
Jason sent me the funniest video of him last night, and it looked like he was questioning the purpose of life.
Yeah.
I was like, that's what happens when you take a trade that goes bad.
Well, I did want to check in. I think we're closer to support. My gut was that if we close on the dead lows, I might be able to buy this maybe after hours. And it's very possible. But I think you had a question about the stock draft. Somebody asked you about that. Yeah, I don't think it changes anything. My biggest tell right now today was that, dude, all day intraday, it's just more of the same. The picks and shovels of AI, just holding, ripping, whatever. I mean, those could honestly become a safety trade in some sense, like if the market wants to price the worst in. But no matter what he said, like you saw Micron and whatever, they're just not unfazed completely. So it's like,
well, I mean, in terms of
changes that theme.
I agree with you. Nothing changes that theme. I mean, you saw what he said. Did he say anything that was like alarming to you for the future of inflation and the trajectory of how we think of rates, or it's just a new paradigm?
Honestly, we went to the grocery store and we're just watching you. So we were gonna ask you what you thought later.
Well, I thought that the market's having an overreaction to someone who wants to switch things up.
How about our hoodie, though, man?
How about our hoodie?
I mean, dude, this was like, we got the catalyst. That's a huge pop right into resistance, by the way. So if it was a trade for you guys, probably a nice little spot to trim. But still, regardless, really good. Like, I really like the sentiment there that, you know what? It's not everything in a broad swath. Microsoft's getting taken out to the shed. Meta is just like, something's wrong. Nobody wants that thing. Maybe they become buys, but if you're long enough term, then I think you're fine. Short term, yeah, this is not. I think my sentiment stays. You can kind of just like walk away today. What are you doing? Walk away, come back maybe next week. And I think it's going to get a little extreme. Like this looks slightly extreme. We're actually 735 was my support. We're really close, dude.
Well, that's my
Really close.
thing, bro. I was texting you in the day when we were barely pushing 745, and now we lost 740. And it's like,
Yes.
hold on, what did the guy say that was so bad?
The guy said 7. I don't. Yeah. So I would try to go back later on, maybe, and like review that. But to me, it's like we usually. This is exactly what we kind of outlined yesterday. Was that I don't have a reason to go to the upside at all. Yesterday, I didn't have a reason to go down. And if you zoom out a bit more on SPY, what I said was like we're stuck in a range. We should go sideways, and all this only really feels bad if you were thinking that we were going to go up. It's the only way it would actually feel bad, because at the end of the day, we're still in that range and we're getting closer to the bottom of the range, which is where I wanted to kind of see, like, can I pick it up closer to that 735 to bounce back up to the upside? And we're real close to that. So if the best case scenario is we actually open red tomorrow, and it gets bought up pretty quickly. That's going to be a tell. In general, that's a tell. Like, you open red, close green. That's what we want to see. But you're making a lot of noise, buddy.
I need to get him a cowbell so that if he ever joins the market close, he could give us a ring. But we got 20 seconds left, folks.
All right, man. I got to prep for our group coaching tonight, but just want to stop by, say what's up to the crew, everybody. Don't worry. You might wake up next week and it'll be a bad dream, but enjoy the weekend, because, the best.
Thank you, Jason.
All right, guys.
Putting Jason's Twitter right there. Make sure to follow him. Thank you, man. Appreciate you. Later.
Later.
All right, folks, on Kevin Warsh's first Fed meeting, market took a little bit of a dump, but nonetheless, the stock market is now closed. And that was our day. That was our day. If you're just joining, Kevin Warsh, relatively neutral. The other committee members, a lot more hawkish. And I mean, I expected volatility. We talked all morning about volatility. I did not expect us to lose 740, closed at 741, but man, 750 to 740 is a hell of a move within basically 35 minutes, all on what the Fed said. Zeta, that was down 6%. Palantir down 2%. Robinhood had a good day, up 8%. Got hit at 110, but we got the $100 close, which is all that matters. Nebius got, 285, 280 on the close, down from 297, but still great day for Nebius. CoreWeave ended up actually going red on the day, down 1.5%. SoFi lost everything. It was pushing 1853, now 1740. That was down 1.2%. VIX was up 11%. Micron was pushing 1100, came down to 1043. HIMS at least got the $30 close. Can't be upset about that. Broadcom actually held up relatively well. It was at 400, ended at 393. Not horrible. Shopify, that was down 4%. Shopify put out a bunch of new announcements today. Market did not care. Snapchat fell 8% after their glasses thing was not interpreted that well by the media. Air Test Systems, that was up 7.4. Shouldn't SoFi rally if the Fed members were hawkish? It's the opposite. SoFi should rally if the Fed members are dovish. The Fed members were hawkish, which means you're implying no cuts this year. Which, look, I don't know if we're getting a cut, but I definitely think we are not getting a hike. And as long as the hike thesis doesn't play out, which is what the market, it feels like, is pricing in right here. But again, I think today is a lot of fugazi action, up and down. I think a lot of the names that are going crazy up might not have had a reason to. A lot of the names that are going crazy down definitely don't have a reason to. I think there's a lot of weird price action based on how this Fed led the meeting, based on how the market interpreted the Fed. Nothing was fundamental about today. If anything, Trump had really bullish pieces of news around Iran and getting ready to sign this MOU, which, by the way, Axios reported, I forgot to say this, they want to sign it tomorrow. They don't even want to wait till Sunday. So there might be an update tomorrow where Trump announces that it's officially signed. So it looks like they want to get this done. That's good news. I don't know why the markets would be upset about that. That's also why we saw oil stay back at 76. But we have to see if that, actually plays out. So all of this to me was a knee-jerk reaction on how the Fed talked, which is, at this point, if you've been following the Fed for the past couple of years, you have to expect that. it's kind of inevitable with the Fed. It's just today was a little more aggressive in terms of how the reaction was. Bernie Sanders proposes legislation imposing a 50% stock tax on large AI companies. AI companies with over $200 million in annual revenue would fund a $7 trillion trust. Legislation would grant the government voting shares to influence corporate decision-making and policies. You know, there is a place called China. If Bernie really wants the government to make all these decisions in private companies, $200 million in annual revenue is not even that much money. Why is he taxing companies with $200 million in annual revenue? That's not enough money for them to actually pay a meaningful amount of tax. NVIDIA makes $200 million every other hour. Like, what is he doing here? What is this? Zeta still down, Pouch is still down. A lot of them popping a little bit after hours. That's what tends to happen after they get a dump. Meta, one of the worst days Meta's had all year, down another 5.4%. Yeah, that headline just came out. Legislation would grant the company or grant the government voting shares to influence corporate decision-making and policies. Trump today on Iran said that the world would have run out of oil reserves in 4 weeks if it was not for this deal. Okay. So you definitely got Trump making the argument that this deal needed to happen right here. This was the moment where he was talking about that.
And oil is dropping like it has never dropped before at levels that went in numbers down $7, down $8. They've never seen anything like that. But if we didn't do this deal, we could have dropped more bombs for another 3 weeks, 2 weeks, 4 weeks, 2 years. You would never have the Hormuz Strait open. You would never have success. Your market would have, instead of going up at levels that nobody's ever seen before, would go down at levels that nobody ever saw before, maybe except for 1929 or whatever. And you know, all the tough guys don't realize that this wasn't a 3-month deal. This was years in the making. You know why? Because I was the one that killed General Soleimani. And if I didn't kill General Soleimani, we probably wouldn't be talking right now about this deal, because he was a mad genius. They never were able to replace him. But
okay, so that's what Trump said earlier today about this Iran deal. Again, I think most of the news we had throughout the day was relatively bullish, but the anticipation of cuts that were met with hikes, even if the hikes are not happening tomorrow, but the perception that they could be happening. The real algo, or the real question that got the algos to go red, was when that, I think it was the British lady, asked Warsh about cuts. And he had to awkwardly say, you know, there was one person who wanted a cut, which I think he was talking about himself. But after, I think he was like, we debated it out for 2 days, and then as a family we came together. He said something like that, and then we put out our statement. But he basically says, you know, he basically said we encouraged a lot of dialogue. So that was him implying, don't ask me about a cut, because there was only one person who wanted it. I'm not going to tell you who. It was probably him, but they had no chance of winning that debate when debating against 11 other people in the Fed. So that, I think, is when the algos were like, oh, like, regardless of all the cool fancy stuff he's saying about the task force and real-time data, yada, there is not a cut on the table. It's just not on the table. And if it's not on the table, then, you know, is that bearish? I don't think that's bearish. I think that's like, yeah, markets would like a cut, but it's not like the markets expected a cut. They expected the trajectory to get to a cut, and even that we didn't get today. So, you know, you had completely no path to see a cut in 2026, which is what I think markets wanted, even if they couldn't guarantee a cut. But I don't know if that's enough to, you know, take us down. Did he literally say that? Yeah, he pretty much said that. He said there was one person who asked for a cut, and, you know, he didn't say who, but that was the debate. Regardless, I think some things are on sale, man. Max 7s are obviously on sale. Nvidia's on sale. Nvidia falling even more in the after hours, 204.38. Microsoft on sale. SpaceX, was this their worst day in history, given it's been public for 4 days? Oh, by the way, 191.45. SpaceX was down 5% today. Still a $2.5 trillion company. This Vanda research stat was crazy today. Vanda said, in the last 3 trading days, retail investors have bought the same amount of SpaceX as they also bought in the following 6 companies combined. 7 companies, or 7 stocks. Meta, Nvidia, Google, Amazon, Microsoft, SPY, and QQQ. There was more SpaceX bought than all 7 of those assets combined in the past 3 days. I mean, when you see that, you have to ask yourself, like, how, and this is retail investors, it's not institutional flows. So it's like, okay, retail really wants SpaceX. But then you also ask yourself, like, what the hell is retail doing buying SpaceX over all these names that are trading at incredibly cheap multiples, at maybe Google excluded, but the rest of them pretty damn cheap. And then you kind of come to the conclusion, like, oh, retail wants volatility. That's what they want. And they don't want volatility to the downside. And unfortunately, all the volatility on those other names have been to the downside. Now, SpaceX had its first day of volatility to the downside, maybe the start of many more days, or maybe people just buy the dip and no one cares. It just feels like FOMO. I mean, look, if you bought a 230 on SpaceX, I don't know how that wasn't FOMO. 100%. Like, that felt like a little bit of FOMO. And could it get back there? Yeah, but today was one of the more red days to see. Any updates from Tom Lee? Predicted a big drawdown. Well, yeah, I think there was one yesterday, but remember, his drawdown had 2 cases towards it. One was the Fed being tested, and then one was the midterm year. We got Tom Lee and Mike Wilson. So here's what Tom Lee said yesterday, and then we'll get into Mike Wilson, who's a bit more bullish, but here's what he had to say.
Is aware of a time running out in terms of having that straight open and inventories running out for petroleum products. So I think the timing, of course, is welcome, and that's why we're seeing markets rally. Whether all parties are satisfied with the resolution is probably less important to markets, and what's more important is that the world economy is not going to suffer from petroleum shortages.
Steve, it was interesting to me. John Kilduff at the top of the hour was saying that.
Okay, so that was yesterday. I'm sure he'll have more to say after this Fed meeting. And kind of here's what Mike Wilson said earlier today. Again, he is pretty bullish, 8,000 S&P, and I mean, he kind of believes this CapEx story continues.
So the next phase of the bull market at this stage typically is multiples are flat to down. Earnings come through as expected, but that can drive the earnings or the stock market higher. And you get rotations to the areas where that earnings growth is underappreciated. And we think that yesterday's action is some evidence that maybe we're going to have that next rotation. We've already had several rotations this year, and we think that next rotation is in some of the areas you mentioned, like regional banks or consumer goods, which are asymmetrically, positively, inspired by oil prices coming down.
This has been the argument that the rally in the equity market is entirely driven by fundamentals. And then SpaceX happened. How much does that kind of torpedo some of this thesis?
Well, look, I mean, markets are driven.
I am curious to hear what he has to say about SpaceX, because as a professional, you would imagine he thinks it's probably bubbly, but he probably doesn't want to say SpaceX is the top of the market, because who would want to end this market run with SpaceX? So I'm curious how he's thinking of that.
By fundamentals and animal spirits at the same time. I mean, you can't separate the two. They work in harmony.
Okay, he's basically saying people are chasing it.
And so, yeah, I mean, it is a little frothy right now in certain areas. I mean, not necessarily in areas, there's a lot of leverage in the system in semiconductors, okay, as an example. And that's coming out now a little bit. That's something we wrote about 2 weeks ago. To me, that's a healthy development as long as there's some place to go to, right? And so if there's no place to go to, then you can have much more serious downturn that can turn into something that's more severe. We don't think that's happening. We think this is a normal transition. I want to go back once again to the beginning of the year when people were really, kind of pessimistic about growth. all we've seen this year is one rotation to the next from commodities. Okay, what happened this year? The Fed started printing money again, right? They did the RMP. That went into gold and silver stocks. Then it went into metals and rare earths. Then it went into energy stocks. Ended up in semiconductors. What do all those have in common? They're all commodities. Okay, so we've had a commodity rally basically bouncing around, and we think now we're going to get that broadening out story that was kind of going in January and February, and it was halted by the war in Iran and the oil price spike and the repricing of the Fed. That now is subsiding, and so we can rotate back to some of these areas, pro-cyclical areas where the earnings are quite good, but they're underappreciated by the market.
What if we get a hawkish Kevin Warsh? Could that hurt the rotation?
Well, define hawkish Kevin Warsh. I mean, there's a couple ways to think about that. I think one is on the rate side, which I think is unlikely. Okay, the other's on the balance sheet, and we don't really know yet how he's going to want to position that. What I would say, and we wrote about this past week, is we already know what's happening, okay, which is that, Jay Powell left him a nice little package, which is that we're basically already seeing a deceleration in the RMP. Okay, so this is I've spent the last 2 years painstakingly trying to follow liquidity because that has been the main driver of kind of the animal spirits. And it was very positive at the beginning of the year when they restarted the RMP or asset purchases, and you had Treasury buybacks as well, and the SLR, increased some capital from the banks. That now is decelerating, right? You've gone from 40 billion a month in RMP to 10 billion a month. So that's a deceleration that's already in place. He's inheriting that. Is he going to come out and say, hey, we're going to increase that? Probably not. Is he going to say we're going to kill it? Probably not. But that deceleration is still in place. So I think we already know the answer to the test. Okay, we're having a deceleration in liquidity in the moment, and that, to me, as we've been talking about, is sort of that's where you can have this sort of summer chop and summer correction. Like in this rotation yesterday, you said it already. We're getting a rotation in a down tape. Okay, that's what I expect. We're going to get a down tape, but we're going to get a rotation, and that's a signal that we're seeing a leadership change.
What's the next risk on the horizon? The market was able to get through tariffs. Obviously, they're looking beyond now the conflict in Iran. For the rest of the year, is it just that potentially, the president says if he doesn't like what he sees in Iran, he'll start strikes again. Is that what potentially could be disruptive?
Well, your viewers probably won't like me saying this, but the markets moved past the war. They moved past tariffs a year ago. I remember in this time last year, June of 2025, everybody was still harping around tariffs, and we had said a month before, like, we've moved past tariffs. And so I feel it's the same thing. The other thing we learned in this war, which is amazing, okay, and I didn't expect this, is we just learned how much supply is out there, okay? Like if you had the situation, this is a perfect storm. If you were an energy bull at the beginning of the year, by the way, energy stocks did incredibly well, and then they peaked literally the day of the attacks. So if you think about this event, you can only get to $125 in oil. And if you inflation adjust that, that's so far below where we were in the Russia-Ukraine war that began, 5 years ago. So that, to me, is just a really strong signal that the world is very resilient in terms of finding energy supply. China's a big part of that because of all the storage. But to me, it's a very bearish view for oil going forward.
I generally have agreed with Mike Wilson over the past couple of years. He was super bearish into 2023. 2024, he flipped mid-2024. And then 2025, he was one of Wall Street's biggest bulls. And then 2026, he was bullish throughout the tariffs. He was bullish throughout the Iran war. He continues to be bullish right now. The immediate reaction from Kevin Warsh feels ugly, but realistically, is it bearish? No. Especially as Wilson says, we already knew what was going to happen going into this. So yeah, Warsh didn't end up becoming hawkish, but the other committee members became. Warsh was the most dovish you could actually ask for when you really think about it. He was the only one who didn't submit a dot plot implying that he wants a cut or he definitely doesn't want to hike, but he didn't want to submit it because it would, muddy the waters in terms of how the other Fed members are thinking. So I think we've got a dove in the White House. I really do. And I think he's going to be a dove for a very long time, as long as inflation doesn't get super aggressive. They also didn't talk about the balance sheet that much. So quantitative tightening, which Warsh has been known for, he didn't mention too much of that. It's just the rest of the committee was a hawk, and that's how the market reacted. Usually, the initial direction of the FOMC is a fake out. Yeah, I agree. And initially, it was bullish for the first 20 minutes, and then boom, it just kind of catapulted down. We're going to have a lot of task force, though. We're going to have a lot of task forces very soon. Warsh wants to be a dove, but the market is saying no. Well, I think the market's reacting to the rest of the members being hawkish. I don't know. Do people feel the market wants to dump? Like if you had to give a vibe check to the market, does it feel like, you know how sometimes you get a vibe that the market's just like exhausted, it's tired, it wants to take a breather, which I think is what happened was it 2 Fridays ago when we had the labor market report? And then, we recovered, not fully now with the ugly day we had today, or do you think the market's ready to pump? And I think I'll give a bull in the bear case. The bear case why the market definitely wants to dump is this SpaceX stuff. Like this is just so aggressive. One could argue that the market might not be able to handle that, although people continue to load up. The argument against it is, well, we just took a breather for the past week. We got all the way down to 720. A lot of these names got hit pretty hard, and when you see a Nebius and a Hood make the move that they're making, it almost is like the market wants to pump if you believe in the legitimacy of those moves versus get dumped. This was the heat map today, by the way. Relatively red across most of the sector. What do you think of Anthony Tan of Grab selling almost all of his shares? He didn't sell almost all of his shares. He acquired 800,000 and he sold 400,000. I believe he had to sell 400,000, most likely to pay taxes for the 800,000 that he acquired. So, yeah, I do not think that is. From my understanding, that's not. I believe he owns 75 million shares. So, yeah, but when you acquire that many shares all at once, there ends up being a tax implication. So I'll look into it, but yeah, even if he did sell 800, he has 75 million shares. So I really doubt he sold 75 million shares all at once. We have seen more insiders selling across a variety of names. Couple of companies have had insider buying. Marvell had insider selling. Hood had some insider buying. Hims and Shopify had a little bit of insider buying. But there has been a little bit more net selling than not. Meta had a couple insider buys for the first time since 2022. It wasn't a lot, but I think it was at 630. That did not change anything. Can we declare NVIDIA as the worst semi stock in the last 8 months? Let's ask ChatGPT. Let's do Claude today. We never use Claude. What has been the worst semiconductor stock in the last 8 months? Is it actually NVIDIA performance-wise? Yeah, SoFi just had an insider buy as well. I want to make sure I answer the right question. Worst by what measure? Stock performance? The most over the last 8 months, Marvell. No, by stock performance over the past 8 months. Dude, AI is so stupid sometimes when it comes to asking about numbers. Okay, let's see what it says. Let's see. I do not pay for the $200 plan. Regular $20. Okay, it's still trying to figure it out. I feel like the LLMs need to partner with, I should go to Perplexity to answer this question. Perplexity actually has a good finance LLM. Like, I'm so surprised the foundation models don't partner with like Bloomberg and just like give you the raw data in an easier way. Because that would be easier. What has been the worst semiconductor stock in the past 8 months based on performance? All this CapEx needs some answers here. SPY still red after hours. Mercado Libre, that's had a lot of insider buying. That continued to get hit today. I mean, the international names obviously have been a dud all year. So have the Max 7s. Let's pull up the S&P 500 year-to-date returns as well. Okay, Claude said, or Perplexity said, dude, why are these things so... It said Intel. It's obviously not Intel. What just... All this CapEx And we can't even get some meaningful answers here, dude. All this CapEx and no meaningful answers. Q's up a little bit after us. You suck at prompts. How is that prompt horrible? It's a normal prompt. What has been the worst semiconductor stock in the last 8 months based on performance? Tell me what's wrong about that prompt. Literally, what could be worse about let me ask Grok. Let's ask Grok. Also, my prompts, like AI shouldn't need amazing prompts. It should be able to get what you're saying without having to literally spell it out. Based on stock price appreciation? No, but I already said stock, and then I have performance. Wolf speed? You know, to be honest, all the semis are up. Maybe that's why I can't give me the worst. Okay, I want the worst stock in the semiconductor field over the last 12 months. Tell me which one has done the worst, even if it's up relative to the other names. Here are your year-to-dates on all these names. So SanDisk at 700% this year. Western Digital, Seagate, Micron, Dell, Intel, AMD, Lumentum, AMAT, Lam Research. I mean, talk about a list of the top 10 names this year that literally this was the year. You had to be long CPUs. You had to be long memory. You had to be long photonics. You had to be long architecture. You had to be long server racks. I mean, we don't even like Comfort Systems, HPE, Corning, Vertiv, Ciena. Like the only SaaS name up there is Fortinet. Caterpillar, GE Veranova. None of the big names that get talked about. I mean, all of these are industrial names, semiconductor names, utility names, energy names. Datadog snuck in there. But where's Meta? Meta's at 395. Microsoft's at 439. Palantir's at 460. Hood recently got to 356, but it was down a lot more before. Nebius is not in the S&P 500. Marvell, they don't have that updated. What's the other one? NVIDIA, 195. NVIDIA's still up 9% at least compared to the others. Okay, Grok said Magnachip Semiconductor is the worst name, even though it's up 40% over the past 12 months. So the worst name that this AI found is Magnatech, and the worst is still up 40%. And it's a small cap. It's a $192 million company. It's up 37% over the past year. How is the prompt horrible? I don't get what you guys are saying. Someone give me a prompt then. Someone give me an amazing prompt. I'm going to literally copy and paste your prompt. Like worst in the context of stock price and appreciation implies, like, I don't think it's thinking of worst as like a company, which is the worst company. Logically, it would be thinking of it as a stock. First, have it make a list. All right, I guess you guys know how to use AI way better than me. A little bit of bump after hours. SPY 742. Oh, is he still red on the day? Do you think we trend down or sideways until next meeting? Dude, when's the next meeting? Next meeting's in like August, right? No, it's July. 29th July. If we were to trend down or sideways for the next month, it would be in line with everything that Tom Lee's been saying, and very in line with the broader midterm correction thesis. I don't know if we trend down. Like, the idea of being sideways to flat means that Q2 is going to suck in terms of earnings, which I don't think I don't know if that's definitely going to happen. Mid, I want to sell all my Hood and buy Palantir here. Thoughts? I don't know. That's a complicated one because Hood could be on the verge of a real breakout. Like, although I think it got a little aggressive today when everything was down, which is always weird. Like, you don't want to see a name take off and everything else. Like, you don't want it to be on the island by itself, especially a name like Hood, because it's a proxy for everything else theoretically. So, but nonetheless, if the prediction market's tailwinds and all that stuff is super exciting, maybe this is on a breakout. Palantir, I think, is cheap relative to all the other SaaS names when you look at their growth. Conventionally isn't expensive. You know, you can make that argument, but obviously Palantir is not as volatile as Hood, you could say, because Hood is dependent on the market. Palantir is dependent on SaaS contracts that they get renewals for with increasing RPO. But if the software narrative Hood's broken out of the Bitcoin narrative, it's broken out of the fintech narrative. If Palantir's stuck in the software narrative, Hood could be a massive outperformer in the next 5 months versus Palantir. So I don't know. That's a hard one. I feel like 50-50 is easier than just completely pivoting one to the other. What about AppLovin? Well, AppLovin, again, got hit hard in the 300s before it came back to 600 2 weeks ago when Salesforce was at 200. Now it's back to 479. Like, all of the software names are either going to pump or dump at the same time. I am more convinced than that, especially after the past 2 weeks. But I like AppLovin. The fact that it was at 600 a couple weeks ago means that should it be at 479 right now? No. Should Zeta be under 19? No. Should Salesforce be at 155 as much as I don't love Salesforce? Absolutely not. Like, this is just dumb. Yeah, the last 100 close was around somewhere in January. Around that time. Do you still like Reddit here? Yeah, I love Reddit here. It gets turned into a SaaS name, which is why, it was at 180 on Monday. It's at 165. Like, you know, it's part of the reason that I think a lot of people are annoyed with markets in the age of volatility that we live in. And they just feel that if they put their money in the market, they don't know what's going to happen given Trump is Trump. And, you know, it makes them question, why should they trust some of these names that they're in, even if they have really good fundamentals, if the macro determines everything. Nonetheless, you can't really control that. That's part of being an investor at the end of the day. But it obviously has led to people, you know, questioning fundamental thesis when the macro determines so much and it's so much more volatile on that fundamental thesis. But usually that's people, you know, that's also people that are levered, and you can handle a drawdown if you're not levered. If you're levered, it obviously sucks. By the way, Chris Camillo bought more Amazon today. I know we were talking about him in the morning. He continues to buy the dip on Mr. Amazon, and he is continuing to buy it unapologetically. This is what Trump said around Vance earlier today as well.
I have a question about this weekend. Why not stick around for the signing ceremony with this Iran peace deal?
I might.
You might.
Yeah, I might. But I'd rather, this is a memorandum of understanding. It's very important, but it might not be the kind of a document that I should be signing.
There's some element to this where you send the vice president. If it works out, great, you look like a genius for sending him. And if it doesn't work out, it's the vice president's
I
fault.
like that idea, sure. Well, this way, if it works out, I'm going to take the credit. If it doesn't work out, I'm blaming JD. You better be careful, JD. He's going to turn his plane around and get the hell out of here. Yeah, I like that idea. I think it's a good idea. Thank you very much, everybody. Thank you.
So that answers the question I had this morning. Is Trump going to be at the signing of this thing? I guess the answer is no. It's going to be JD, and I don't know who the Iranians are going to send. It's got to be the parliament speaker. There's no way they're sending the Ayatollah. Could you imagine the Ayatollah and JD shaking each other's hands? It's got to be some random other representative. Do we think JD is actually going for the presidency in 2028? What are the Kalshi odds on that? I think Rubio is still leading. No, JD's only 15%. Rubio's at 18. It's not like he's that far below. You got Newsom for the Democrats. $45 million has been traded on this thing. Rubio at 18, Vance at 15, Newsom at 14. Dude, I have so much respect for people that like are political analysts that have to really try to figure out how to do this stuff, because I feel like this is legit gambling. Like, who knows? Like, I think it could be Rubio, but there's so many variables that are involved. It's not like you can look at a price of sales ratio or something. Like, this is just pure emotions and feelings and vibes and who Trump wants to run, who the party wants to win. I would have no idea. A lot of you guys saying, yeah, Rubio. It's gonna be you, Amit. Bro, could you imagine President of the United States? That'd be crazy, dude. President of the United. There's no way I could ever run, dude. The amount of content I have online and the things I've said online, the amount of things that would be clipped, bro, it'd be crazy. That is kind of scary, though, dude. When you run to be president, like the media basically goes after you because you're trying to become the president, right? So they're gonna any story they can find on you, they're gonna blow it up, and that's like it's a lot for your family, you know, when you have to deal with that. S&P 742 after hours as well. Yeah, the amount of words I would mispronounce live speaking to the country. Your hair would go gray fast. That is very true. Nobody cares what you said when you were 28. Yeah, but the problem is it'll come up. It'll always come up. That's true. I can't even run for president until you have to be at least 35, right? You have to be at least 35 to even have a chance to begin. That's crazy how they have a limit on getting there, but they don't have a limit on, you know, like if you're 80, you can still run, but if you're 34, you can't. So the limit only applies to the older you get. Maybe you have to let us in on the insider trading. I don't think I could insider trade better than Trump. That man knows how to insider trade. Let's hear from Jeffrey's analyst on what he thought would happen with the Fed. This guy almost became the Fed chair, ended up being Kevin Warsh. Here was his take on what happened.
Is not really something to get too worked up about. What I will say is I think this is all very much as advertised. We knew that Kevin was very much a believer in the Greenspan era, wanted to roll back the transparency that had been built into the statement and into the press conferences. And he absolutely came out guns blazing. He ripped the statement apart. There is as little forward guidance as possible as you could imagine. And he basically got pressed by every person in that room during the conference to give some guidance. And he just deflected it masterfully. I think if Greenspan were watching this, he would be smiling. I think he would recollect his days of talking about purposeful obfuscation, which I believe he first discussed on CNBC in 2007 in an interview, and talked about how that was his version of Fed speak. This was purposeful obfuscation. We saw a return to that with balance sheet policy a few years ago as they became very cryptic globally, central banks, about how they were going to move the balance sheets. Now we're seeing it come into rates. The market's going to get a little testy. It likes to be guided. Now it doesn't have so much of a guide, so it might get a little angry for a while, but I think we're going to be in a good place in relatively short order.
But David, isn't it exactly the part about what he said about where he stands on price stability, his sort of guidance, if you will, that caused the markets to decline? So I agree that he wants to be opaque, but I don't think there's anything opaque about we will deliver on price stability. Inflation is a choice, and saying that they will deliver on that mandate of price stability over and over and over again. No?
Well, I think, you know, we've got something for everybody. He talked a lot about productivity. He talked a lot about how basically the Phillips curve in his world is a joke, that the way to kill inflation isn't to kill the economy. He was very specific about that. The bulls or the doves would kind of like that story. He also talked a lot about how policy was restrictive in certain parts of the economy, like housing, not restrictive in other parts of the economy, like tech and financial markets. So he hedged his bets on all sides. You can pick and choose what you want. You know, Melissa, there's a famous storyline, and I worked at the Fed in the early 90s. Greenspan used to have 2 pictures on his wall when you walked in the office. One was an article, I believe, from the Wall Street Journal that said Fed pivots dovish. The other one, I believe, from the New York Times said Fed pivots hawkish. They were both on the same day. They were both after a chair speech. He was so proud of the fact that there was one commentator that said he was bullish and another one that said he was bearish, one that said he was hawkish, one that said he was dovish. That was his purposeful obfuscation. I think Kevin's striving to have those 2 articles up on the wall, and maybe, you know, maybe we'll see a few people spin some of the things he said in that press conference, which I think you could, if you wanted to, quite dovishly. And that's going to be his goal. Keep it obfuscated. And the market's
David,
not going to like it at first. I get it. The
that's
market
fine,
doesn't like regime change.
But why is that a public good? Why should that be the objective of the Fed chair?
I think what it is, not the objective. It's basically saying we're not really capable of giving you good guidance. So why should we lead you down this path? Further, Mike, here's the deal. We get.
Do people agree with that? Because I think that makes sense. If we're not capable of giving you good guidance, which when in the past 5 years has the Fed given even remotely mediocre guidance, then we should try not to. Like that to me, I don't know if they're going to be effective at actually implementing that strategy, but logically, I feel like that makes sense.
Everybody down a path. We get everybody excited. Oh, 100% probability of a rate hike, 100% probability of rate hike. And then the data changes. And then everybody's leveraged to that position and we get some big explosion later. What it does is it creates more sort of shorter term volatility, but in a tighter range without those explosive things that happen, which, by the way, when they're really explosive, they're things like the rate moves we got in 1998 with long-term capital, where we had so much leverage in the system in the fixed income markets, or in and around the global financial crisis, or around COVID even. So I think this is a big change in policy, not unexpected, by the way, very much advertised, but the market's got to adapt to this idea that, you know what, every day we're going to come in and maybe move short-term interest rates a little more than we used to, but the broad range might actually be a little tighter in the end, and we're just going to bounce around in that tighter range more frequently and more aggressively.
I don't think that's crazy. Again, as he says, the market's going to have to figure out how to navigate that. But I don't think that's crazy. You get in some after hours pops here, folks. That's what I'm saying. The decline towards the end of the day just felt so knee jerk. After hours is also probably a knee jerk, but it didn't feel really that reasonable for SPY to lose 740 after hours. Like that was, it's almost like SPY was hunting for liquidity down at those levels when, you know, it didn't really need to. 743 right now after hours. Yeah, post-Fed algos as normal. Fake pump in the morning, fake dump in the afternoon. Okay, Ori, I just used your prompt. That was actually a really good prompt, Ori, because this is what we've got. So Skyworks Solutions was the worst semiconductor name so far at only a 12% return. And then NVIDIA was number 2. It's doing year to date. It's not doing 12 months. Technically, it's Broadcom at 8%, so it's not necessarily in order. But the fact that Broadcom's the worst one, and that's 8%, is not horrible. And Broadcom was a lot more before. And then NVIDIA's number 3 or number 2 with 11, and then Skyworks number 12. And then you have names that are 60, 70%, but those are your worst performers, which is still pretty crazy. I mean, if the S&P does 12% this year, then NVIDIA is doing market returns. If the S&P does 20%, which I would imagine NVIDIA does more than 20%, if the S&P does, then maybe we'll get above market. Also, some of these, you know, from the lows, like Qualcomm from the lows is way more than Qualcomm from January 1st. Who's complaining about 12%? I feel like every single retail investor on the planet right now, if you said, hey, I can guarantee you 12%, they would be like, do you think I'm a peasant? Do you think I'm a peasant? 12% on my money? You think that's what I get up in the morning for? 12%? Until we have another 2008 type of crisis, 12% is not going to seem like it's worthwhile, even though obviously 12% is pretty good. It's just relative to the S&P. It's been like 15, 20% the past couple of years. That's why 12% feels like it's underperforming. But until you get a really ugly drawdown where people are like happy for every penny they can get out of the markets, which right now that's not the case. I mean, SpaceX is showing this. Like, people are greedy. They want more. And wanting more is, part of what leads to that much excitement. Want 50%, nothing else. Amit, I think Warsh was pretty dovish. Yeah, again, I think he tried to play both sides, but he ended up seeming more dovish than the other ones that were there. The prompt is in Ori Super Chat. If you just click Ori Super Chat, it's on there. Then that's how you get the prompt. Peter, thanks for the Super Chat. If you had to choose one of these two stocks, which would you buy right now, Circle or ServiceNow? ServiceNow would be my answer. I think ServiceNow is cheap. I think Circle's cool. I don't understand Circle's business model as well as other people do in the stablecoin space. I also think Circle needs the Clarity Act, and I don't really know at this point if we're getting it. So I'd probably pick ServiceNow. Was Cerebras up today? Cerebras 215. That was up about $1 on the day. Dude, Circle at one point was 150. Damn, this thing's 80 now. So this thing definitely took a correction from February. How long does it take into price in a rate hike? I think it would happen instantaneously. If we ended up hiking rates, like immediately, you would see your high yield savings accounts and your money market funds all give an extra 25 bips of return, roundabout. By the way, people are super bearish gold. We talked about the gold ETF outflows yesterday. Take a look at the put skew on gold. It's the highest it's been since 2017. So maybe gold is actually where all the fear is right now and presents the opportunity. It fell another 2% today. And honestly, if we hiked, I don't know if it would be good for gold, because some would say gold's a risk-on asset and a hike would be bad. Others would say gold's an inflation hedge and a hike would be good. And so maybe a hike would actually help it. Top 20 stocks traded in the options market today. None other than the top 3, which I predict will be the top 3 for a very long time. Tesla, NVIDIA, 3 million contracts each. And then SpaceX. Then you got Apple, Microsoft, Hood, Meta, Amazon, SoFi, top 10. Again, 500,000 calls, 200,000 puts. Micron, Intel, Broadcom, MicroStrategy, Palantir, Netflix, Google, AMC, AMD, Baba, and Marvell. Those were your top names here. What do you think about 3X ETFs? I think they're trading instruments. So if you're trading a 3X ETF in the middle of the day because you think there's a catalyst that you can trade, you can make a lot of money on it. Holding them, I don't have the stomach for that. Obviously, retail has the stomach for these 2X SpaceX ETFs, which continue to get billions of volumes per day. NVDL used to be the most common 2X leveraged NVIDIA ETF, and now people don't really talk about it. But yeah, they're not for holding. They're just for... Some of them that you could hold are like TQQQ, but you've got to be really right on a 4 to 5 month time frame. Otherwise, like, the NAV erosion inside the ETFs can be a little ugly. I don't get how Tesla's up there anymore with the threat of potential cash only, no stock running from a SpaceX acquisition. I've always struggled to understand why Tesla's traded as much as it. I mean, look at the calls: 1.6 million, the puts 1.5 million. It's just people hedging each other out. It's not like there's some massive alpha that the options volume is showing you on one side or the other. But Tesla is one of the most exciting companies in the world, even if the stock price hasn't really reflected that. And I think it just has such a cult following of the amount of people that like trading it. I mean, there's so many people that just love trading Tesla that it leads to, the biggest options market along with NVIDIA. And I think SpaceX will be, up there with them as well. The stock draft is officially over, guys. We are done. So this thing is irrelevant now. I'm still in first place right here, but it doesn't really matter. We are switching to the new one on Saturday. Hood obviously helped out a lot today. But yeah, this is over as of Monday. And we'll be moving on. Don't leaps get priced to zero if SpaceX acquires Tesla for like $450 and it's cash now? Like, yeah, but do you think SpaceX is acquiring Tesla in 2 years? Because if that happens, then yeah, theoretically that thesis could play out. But if it doesn't, then I mean, there's plenty of time to trade those leaps on Tessie. What did you win? I won the first pick. That's it. Which I already told you guys, I have to pick NVIDIA, but I feel like I'm going to regret it, dude. But I have to take it. Like, honestly, send NVIDIA below 200 before Saturday. Let me get a good bite at the apple here. We should have put money on it, dude. I wanted to. For all you guys saying put money, I wanted to do it last time. Steve said no. I was like, dude, let's put money on it. Let's all put $1,000 and the winner gets 5,000. And Steve said no. I don't know why he said no. I think he just didn't like the idea of money being involved. I was like, bro, it's $1,000. Like, who cares? It's fun. So that's why we didn't do it back then. Otherwise, I'd be $5,000 richer. But now it's just bragging rights. The loser should get a tattoo. Oh my gosh. I've yet to get a tattoo. I want one, but I'm also like, dude, I'm afraid. I'm going to look at it one day and be like, why did I get this? I feel like you have to have a mentality to get a tattoo of just like, you just really want the tattoo. You just don't care. And I feel like I would wake up one day and be like, why did I get this thing? You guys should do 10K this time. Dude, 10K for 6 of us? Winner gets 60K? I mean, that would be fun. That would make it really exciting because 10K is a decent amount of money. It's a lot on the line. I don't think Steve's going to agree to that, though. I do think 1K is, it's fun. But realistically, it's not even about, winning or the money. It's more so about like the idea of managing a portfolio, right? Which is what all of us do. So even if this is an imaginary one, it's fun to kind of deal with the intra-week and intra-day dynamics of navigating portfolio. You'd have to give the commissioner a rake and he might agree to it. By the way, I cannot get enough of the New York Knicks. Like, I've watched every interview of these guys winning. Have you guys seen the one of OG Anunoby, who is he hit the game-winning shot in Game 4? The dude was stoned out of his mind on Good Morning America the other day, and it was the funniest thing ever. Like, I don't know why they had him live on the show that day, but they tried to ask him a question, and he was just like, "Why am I here? What is going on?"
Talk about the difference Coach Brown made and how he brought you all together.
He's been great. He's been great. Mike's been great.
Look at him, bro. He's just like, he is absolutely gone here. They must have been up for 3 days straight partying and then had to do these interviews. Oh, we got an insider buy. Autodesk CEO buys $500,000 worth of shares. Okay, so you got some Marvell sells and Autodesk buys. Autodesk, another SaaS company, 2,460 shares. Literally, he was on a different planet. Literally a different planet. Let me see if I can find the other clip. By the way, England is up right now, right? England 2-2. It's halftime. Okay. They were up. Now it's 2-1 or 2-2. There was another clip on Good Morning America, dude. It was so funny. He was just staring at the host like, why are you guys asking me these questions? I thought it was so funny. But yeah, I'm like watching all these Knicks interviews and I'm like, man, I'm just so happy they won. I'm like so freaking happy they actually brought a championship to the city. Okay, I think this is the clip. I think.
over these last 4 years. It's been like the most consistent I've been able to be around my dad. So,
and OG, let's get to you, man. Come on, just smile one time for me. There we go. Yeah.
There it is.
Hey, give us that meme, OG. Give us that meme. That's what I'm talking about. You know,
Oh, he's looking at you. Oh, you getting that look now.
Well, you know what? You had the game-winning tip in, right? In Game 4. Coach Brown called it the most iconic shot in the history of New York basketball, and I think we all can agree that it really was, man. But had the enormity of what that shot sunk in for you yet?
I mean, kind of, yeah, just because we won. Because in the moment, had to get ready for Game 5, so couldn't really, dwell on it or be excited about it. Just had to prepare and, watch the film and just erase that game and move on. So a little bit, yes.
When it's happening.
That's crazy, bro. He's just so nonchalant around hitting the greatest shot in New York Knicks history. But he did it. And he just went right back to work. I cannot watch the World Cup. I don't even know if I was allowed to play that clip. If I watch the World Cup, they would immediately ban me if I watch the World Cup. I also think I need a FIFA subscription, right? Oh no, isn't it on TV? Hold on. It's on ESPN, right? I have TV. Yeah, it's on Fox 5. Oh, yeah, I have it. England versus Croatia. There's no way I could watch it, though. They're definitely going to ban me. But I do have it. Yeah, it's on YouTube TV. Who do you want to win the World Cup? I want Portugal to win because I want Ronaldo to get a ring. I mean, it would be cool if Messi gets 2 World Cups. But I also feel like Ronaldo's so good, he should have at least one. Have it reflect in your glasses. How can you stream CNBC without being banned? CNBC kind of doesn't care. They're, I think from their perspective, promoting their business content to a new audience is beneficial for them. And it's also I'm reacting to it while listening to it. But sports is so different, right? Live sports, the league rights that people have to that content is so much more intense. But CNN, Fox, a lot of those news organizations don't it's the news at the end of the day. They don't care that much about it. But Netflix cares because they spend all this money on the content. Warner Brothers cares. You can't just watch Harry Potter, But the news is not as serious. Well, it's Ronaldo's last World Cup if it's Messi's last World Cup too, right? How old is Messi? He's 38. Yeah, Ronaldo's a little older, right? He's 41. Yes. Okay, so I would imagine this is both of their last hurrahs here to get the job done. Are you gonna watch the World Cup? No. Yeah, guys, I don't really watch that stuff. Basketball is the one sport that I kind of care about, and the Knicks are the one team that I kind of care about. So I ended up caring about the finals. But I mean, dude, if it was OKC versus the Celtics, I wouldn't have even talked about it. The idea that I would have been on my couch and actually watched those games, I just wouldn't have cared. So with soccer, I also just don't care that much. But I'll be excited for whoever wins. Thought you've been to cricket, dude. I think cricket is the most boring thing. I get so much shit from my family members that love cricket. I'm it's cricket. I feel like cricket's like baseball. There's nothing interesting about it at all. Never got into it. It's really just basketball. That's the only, and a little bit of NFL, but that's what I've loved. Is that it? Is that all we got? Market's a little bit green after hours. Kevin Warsh officially is the guy. Why was Robin it up today? They got a couple price target increases. Dude, I think something fishy is happening with Hood, man. That insider did not buy $50 million worth of Hood because he thought some price targets were going to, also the price targets were 110, 115. It was the same analyst that downgraded them in March. The price target thing, I don't believe in. The World Cup stuff, yeah, but that's temporary, right? That'll be a good boost on earnings. But again, that's not going to happen, every single month. I think they're either going to do an acquisition. I think there's going to be some shit that we're not expecting. that the market tends to know about all the time. Like if you're an insider and you have that much hood, what the hell are you doing buying $50 million of it at $80? Like there's got to be some reason more than I think the stock's going to go up in the short term, because he's not going to sell 50 million of it tomorrow. If he does, then like what, he's going to be trading hood? Like I doubt that's happening. So I think there's more to this story on hood, especially with the divergence from Bitcoin. I feel like the street's got to be thinking of something deeper. Acquire SoFi. I don't think they'll be acquiring SoFi anytime soon. But again, this is the difference between hood and SoFi, man. Like when hood moves, it moves. SoFi, we're begging to even get a move. Now, when hood moves to the downside, it also moves. But then again, SoFi got cut in half this year as well, right? So it's not even like you can say, well, hood's more volatile to the downside. It's like, yeah, but SoFi also got hit this year. So now to the upside, the only one that's running is hood, like aggressively, which has been the story of these names for so long. And I think that story can change with SoFi, but you need cuts, in the words of Noto, for it to really change. Acquiring AK Media. Oh my gosh, dude. It would be crazy, bro. Like, see, if Robin had ever acquired AK Media, there's... Okay, the only way that would play out is if they become like the exclusive sponsor of the Market Open, Market Close. Which, like, to be honest, dude, that would be so cool. Like, if there was a Robinhood logo just in the bottom of the screen every day, and like that, they were the partner of the show and all this stuff, like that'd be awesome. But the problem is I could never talk about the stock then. There would be no way for me to talk about the stock, which would suck. I feel like I would be banned from talking about it. I could like talk about Robinhood, but I could not talk about the stock. And I couldn't go on the earnings calls and ask the C-suite questions, because at that point I'm not an employee, but I'm someone who's being paid by them. So like you can't, you know, like, yeah, I would have to use Legend. That would be the hardest part of it. I would have to use Legend. No, I mean, look, I'd be open to like an exclusive sponsor of the show, especially if they could help get me to the vision that I want to get to, which is like a real studio, like real production, real, like if we could have a real studio in New York City, which is the mecca of finance, and get to do this show every morning, and have a lot of guests and just like camera angles and audio visual people, like just have so much more to the show. And if you could have a sponsor financially support that, I'd be so down. It would have to be the right sponsor. And I also wouldn't want the sponsor to like want me to say anything about them. I would just want like them to be okay with their logo being, which some sponsors are okay with. Like a lot of sponsors and a lot of companies, they just want the brand awareness and, you know, your logo being seen by hundreds of thousands of people a day. That's enough for many companies. But who's the right company to do that? You know, I don't know. Couldn't be Palantir, couldn't be Robinhood. I feel like it can't be a public company. But it would be pretty cool. We just have to think of like, you know, what that could look like going into the future. I just don't know, man. Like it's like I obviously like Mumu, like no, bro. We're not like Mumu's not freaking sponsoring the show. Like I would want such a legit brand. Because again, I've never taken a sponsorship. I've never done an exclusive part. I've never done anything like that. I would want it to be something that's so legit that like you see it and you're like, wow, that's a quality thing, you know? And that would obviously help with a lot with production. But the question is, could you even get a brand to care about that? It's not Grindr, bro. It's not gonna be freaking Grindr. Although I have used their product just to download it and do my DD, not because I'm an active user. The draft is on Saturday. It's on Saturday. Dude, it cannot be Palantir or Robinhood. We can't do that. Then I can't talk about like, and no one would trust me if I'm talking about their stocks and they're sponsoring the stream. That's not how it works. But like, I don't know, like Substack. What if Substack was the official partner of the stream? Like Substack's a cool, like Substack's a great brand in my opinion, like a phenomenal brand, amazing company, tons of finance media on that. I would imagine they would be happy for their brand to be associated with the show in front of all these retail investors that could go to Substack, and like that would be a cool thing. And they're not public or anything, you know, so that's like a company that it comes to mind. that also I wouldn't have any conflict with. I don't want to do Fidelity or Schwab, bro. Like, I don't want to do those types of brands. They're I don't know. I want like new, interesting finance stuff. Not those. Can you name the channel currently right now? That would be a cool idea. I wouldn't want to do SoFi either, bro. I don't want to do something that stops me from being able to objectively talk about those companies. It's got to be something legit, but something that allows you to actually do what you want to do. BlackRock, that would be. Is Apple pumping after hours? Apple. That is a pretty big candle. What's the news here on Mr. Apple? BMNR. Apple. Whoa. Apple to raise prices due to memory chip crunch, Tim Cook says. The CEO tells the Journal in an exclusive interview that soaring costs make price increases unavoidable. That's not a good reason for this thing to go up, dude. That's not a good reason for the DRAM and NAND prices are up 4x year over year. 270 will be added to the next iPhone Pro. Macs and iPads will get more expensive. Cook says this is a 100-year flood. I've never seen anything like it in 40 years. Where's Micron after hours? Micron's up 2%. Yeah, what a way to go out. That's not a good reason for Apple to be up. Like, passing the price on to the consumer is not bullish. It might be short-term good for their margins, but if anything, I think it's just keeping their margins intact. I don't even think it's like increasing their margins. And it's bearish consumer. Yeah, and it's horrible news for inflation. Although I do have sympathy for Cook, right? I mean, the memory prices. This is why, this is why Jonathan Ross of NVIDIA had that warning to the memory companies at that conference 2 weeks ago. And he was basically like, if you guys don't figure out how to build more memory, we're going to make it more efficient. Now, granted, the amount of memory demand is so massive, I don't know if they can just solve the memory issue, but we need more memory. And this is probably why Micron's going to be worth more than Meta soon. But yeah, it's not really for the best reason. I mean, the entire thesis on the memory companies this year has been there is so much demand, not enough supply. These guys control a commodity that is now not a commodity because we need so much of it. Therefore, prices have to go up. And it's incredible because there's no intellectual property or any meaningful value associated. It's literally just memory. And because we need more of it, that's why these stocks have added trillions of dollars of market cap, which begs the question, can they hold trillions of dollars of market cap into the future once that supply-demand imbalance changes? I don't think they can over the next many, many, many years. Over the next many months, they probably are going to increase their valuations as growth will go up and supply-demand imbalances will get worse. But that's been the story of 2026. It's like, what's the supply-demand bottleneck? And boom, how do we put as much money as we can possibly into it? Which I think just caught a lot of people off guard this year. Because you would think NVIDIA, which like has the IP over the chips and, is developing something very hard to create. Memory is not hard. It's hard to build up a fab. It's not that hard to produce. It's memory at the end of the day. There are Rubins, Feynmans, Blackwells. These are like incredible, MI450s from AMD. These are hard things to build. It's just the companies getting the value or the companies providing the things that you put into the hard things to build, not the companies actually building the hard things. And I feel like that's been the craziest part of this entire cycle this year. Okay, that's your headline for Apple. Apple 298 hit 300 for a second and then came back down. By the way, SK Hynix is going to be listing on the NASDAQ, I think in July. So if that happens, that's going to be a lot of retail money in the States going into NASDAQ or going into SK Hynix via the ADR. Apple 298 after hours. Paramount Skydance has secured China regulatory approval for Warner Brothers Discovery deal. Okay, so that looks like it's officially happening as well. The memory bus cycle is going to be worse this time go around than the dot-com bubble. You know, again, I think that narrative has some legitimacy towards it, but then you hear Jensen talk up SK Hynix and Micron as much as he does, and you know, you start to realize this memory thing. I just think about it from first principles. If we have so many agents running so many tasks for us autonomously 24/7, they're all going to need to remember more and more and more stuff, which means you're going to need more memory demand. So my question is not on the legitimacy of the demand itself. It's the supply imbalance that's causing the prices. And, you know, I don't know if that changes or not. Input costs went up by 100, so they're raising price on consumers by 270. Look, these Apple products are legit. They are legit. I just got a funny text. Where's Steve? You guys said he was freaking out about this Fed chair thing. Let me call him today. Let's see if he is still freaking out about this Fed chair.
Hello?
Steve.
Ahmed, how are you?
Good. I'm live. My chat has been telling me that apparently when the FOMC decision came out, you were a little upset, to say the least.
Yeah, I mean, well, I was upset about the dot plot and the way some of these idiots voted.
Calling them idiots is a little aggressive, don't you think? I mean,
you know what the nice point, Steve, is? I just took a walk to my card shop and bought a bunch of sealed Pokemon booster boxes for the hell of it. And now I'm walking home.
You bought sealed Pokemon booster boxes today.
Yeah.
Okay.
They're in my bag. I'm about a half mile away from home now.
I feel like that's your hedge against inflation, given what you heard.
Well, you know, I got to get my steps in. So I was like, instead of going to the right, we're going to go to the left. We're going to go to the card shop.
Okay, so why do you think they're idiots? Because they want to hike? Is that the main reason you're upset?
Because you have people on the Fed that wanted 2 hikes this year. They clearly, all of them should be fired from the Fed. Now, Warsh did an incredible job. I'm so excited for Warsh to be the Fed chair. He's doing what he should do. Bring experts in on task forces. Watch Jamie Dimon come in, Bill Atkins, David Sachs. Watch. I'm so excited. Because what are these morons in the Fed going to do when they start talking to Jamie Dimon? Tell me he's wrong? Warsh is bringing him back up.
So did you at least like how Warsh talked about reforming the Fed and the task forces and all that stuff?
I loved it.
I loved it. I thought that was amazing.
I think Warsh did an excellent job. And one of the most important things, if not the most important, we're going to real-time data. No more backward-looking data. It may take a little bit of time, but he is all about current data, not backward-looking, because a payroll period 6 weeks before is not the same picture today. And I love it. He is doing the right thing. And look, he's one vote. He knows, okay? He knows. He cannot create a Fed cut out of nowhere. And with Fed Chair Powell, or ex-Fed Chair Powell, still on the committee having his hooks in, he needs to bring in actual experts to back him up and talk some sense into these people.
Yeah, it's more so like he has the right plan, and he was kind of throwing some subtle shade at the other members that
100%.
For some reason think we need multiple hikes, bro. Like that's a lot.
These people live in La La Land. They haven't had a real job in God knows how long. They haven't lived almost $100,000 a year in God knows how long. And they don't understand that raising rates hurts the actual majority of Americans. Like they're too brainwashed and stuck up to understand that that actually hurts Americans.
Yeah.
Like the jobs report does not show up in CPI, and productivity is basically eradicating any type of gains on the other side. It's basically even. It's like 0.4 differential. So I think Warsh is correct. And I think that Warsh is going to do a great job as a Fed chair. And I think that we have a lot of dinosaurs on the Fed that are stuck in 1970s and 1980s economics in an economy that is actually technological revolution compared to back then. And they don't understand how the new economy works. 70% services. Warsh gets it.
I agree with you. I thought it was quite incredible for the market to have to react to 9 people wanting a hike, but I get why we went red. I mean, it's hard to be super bullish in the short term, at least, when that happens.
But it makes you wonder how these people are still on the Fed. Like, it almost feels like these are lifetime positions again.
Yeah.
Why don't we have anybody that actually understands the 2026 economy?
Well, they host presentations and go to conferences for a living, to be honest. So,
which is not the people I want making decisions.
Yeah, I agree. It's not the people actually dealing with what's happening in the country.
I mean, you have an account for trueflation. I brought it up today. Look at trueflation. It's 1.84%. There's over a 2% differential versus where CPI is. And I'm pretty damn sure they're going to move on to real-time data. And look, I think inflation's going to go up from here. It's not.
No, I mean, you've been right. Oil's below 80. If anything, it's going to go down.
And I liked what he said about the Fed will make sure of both. I mean, for employment and inflation. So I'm a fan. I'm a fan of Warsh. How'd you feel about it?
I felt good, but Steve, we got to cut you short because this is okay. There you go.
Yeah, no, I'm walking through New York City.
No, I know. I'm not even blaming you. I just like, oh, dude. By the way, so we have our pod tomorrow.
Yep.
Do you think we're gonna be able to do our pod in the midst of that parade, or?
The parade's during the day, and the parade's nowhere near it.
Oh, perfect.
Parade's during the day, and the parade ends at City Hall, which is nowhere near it.
Oh, amazing. Okay.
Yeah, we're not going to be impacted at all.
Okay, so we got a lot of stuff to talk about on that pod. Yeah, my thoughts. I agreed 100% with you. I really liked Kevin Warsh. I thought he sounded like a guy who wants to bring Palantir in and actually reform the Fed and use real-time data. I hope these task forces are not like consultants. I hope they're like more legit, powered by tech. But the other committee members have lost their mind, thinking we need multiple cuts this year.
Multiple raises.
Sorry, multiple raises.
Yeah, and look, the other thing with him, he was very elegant. He didn't call anybody out by name. And he did a very good job of telling everybody they were stupid without saying they were stupid.
That's true.
So I really liked his demeanor. He answered everybody's questions. And he did what he needed to do. He did exactly what he needed to do. So now it's a matter of who he brings in. Does he bring in Jamie Dimon? Does he bring in Ackman? Does he bring in Sachs? Does he bring in Freeberg? I don't know. I don't know who he brings in.
Dude, those would be the type of people, though, you expect to lead a task force. So
100%. You bring in the biggest guys because what are you going to tell? Like I said, you can tell Jamie Dimon was wrong. Guy is in charge of JP Morgan Chase, the largest financial institution. You can tell him he's wrong?
Yeah. You know.
It's going to take 6 months. We may not get a cut this year. I got to listen to it again. And I got to do some work tonight. Maybe I think we only get one cut this year. I think it's going to take 4 to 6 months to maybe change some of these people's minds. Or maybe they just say, you know what, we're stuck in our ways. I don't know. But Powell being there is a disgrace.
Oh, Powell's still on there, right?
Yeah, he's a disgrace.
I forgot Powell's on there.
That's why I think he's moving to this task force. Because I think he's bringing people in to back him up and talk to everybody individually and try to cut the reins off of Powell, trying to pull strings from behind the scenes.
this is a game of politics. He's going to have to navigate other people's opinions and feelings, and maybe those task forces help. But I mean, will they actually change Powell's opinion? I guess is the biggest question.
It's not Powell that they need to change; it's everybody else, and discourage Powell and get credible people in there. Bring in Elon. What are you gonna do? Tell Elon he's wrong? You know, you bring in the biggest CEOs and the biggest bankers and have them all on the same page. And then Kevin Warsh can then say, well, you know, we brought all these guys in. Here's the data, what they said, and here's how the Fed voted. I wish everybody's name was next to the dot. They should have to assign their name with how they vote.
Well, the funny thing is the big bank CEOs and big tech CEOs and the average American, they all want lower rates. So everyone's aligned.
I mean, lower rates lowers the carrying cost on credit card debt. It lowers commercial credit debt from loans from businesses. And you get debt to a lower place, you can refi the national debt and chop off a couple $100 million off interest. There is no reason to increase rates. Like, seriously, everybody who said, and here's the part, forget what I was about to say. If you look at the dot plot, so they think we need a rate hike now and then cutting next year. Sense. Like, really think about that. What, you want to cut for 6 months? I mean, you want to hike for 6 months and cut?
Especially as oil's coming down. Yeah, that really makes no sense.
As oil's coming down. So you're telling me you want to hike as oil comes down, and then after it comes down, you want to start cutting. Like, what are you doing?
Yeah.
So it is what it is.
All right. Well, thanks for letting us know. A lot of people told me that you were a little upset.
Oh, I was pissed. I was heated. Heated.
Yeah. All right. We'll talk to you later, Steve. Thank you.
Later.
Later. Yeah, the dot plot I agree with also made no sense. Because if we did hike now just to cut later, you'd rather just leave rates as they are at that point instead of, you know, hiking to eventually cut. All right, folks, that is it for me. Fed chair meeting, Mr. Kevin Warsh. We'll be back tomorrow. Tomorrow's the last day of the week for the stock market. And yeah, we will be live tomorrow. Market open, market close. See how the market reacts on a full day of the open after Kevin Warsh. Again, knee-jerk reaction to the downside, up a little bit after hours. Hopefully we get a pivot tomorrow, but overall, it is a new era for the Fed. Hopefully that era is respected and welcomed by the rest of the committee, but time will tell to see if that ends up playing out. All right. Thank you, everybody. Appreciate you guys. I'll be back tomorrow. Market open. We'll keep going from there. And we'll see how this market ultimately reacts to Kevin Warsh. Thank you, everybody. Appreciate it. Have a great day. See you guys tomorrow morning.